Good morning. Welcome to Risk Neutral Trading. This is my excuse me. Wow, got something in my throat here. This is my virtual trading journal. And you know, I got to get things going here. Different screens, different monitors. So yeah, welcome to Risk Neutral Trading. This is my virtual trading journal. The idea here is that the video that's on my two primary trading monitors are captured in the recording, and my voice over here provides insight as to what I was thinking. And I got something weird in my voice. There we go. Provides insight as to what I was thinking at the moment, so that completes the journal. It completes the recording. Excuse me. So let's see if that works. Okay. Yeah. First of all, this is my personal virtual trading journal. All trades that I take are live, real time, on Bookmap, and in real time on live data. There's never a recording or a replay or a rear view mirror. Oh, I entered here and I got out up here. None of that stuff ever. Think about it. Who would I be trying to kid? Myself? It's my trading journal, and it's a record of my development here, this consistently profitable trading business. So that's the point of the story and the point of this stream. Now, having said that, this is not intended for financial advice or trade advice, because I'm not licensed to provide that, nor is that my intention. And there's a disclaimer in the description, so please read that. However, again, I do only trade statistically vetted or verified trades to have a positive edge or expectancy, and I take them live. I anticipate them as they set up. I take them live on Bookmap, and I manage those trades in real time, always. And if that doesn't occur in a day, there isn't a trade. It's that simple. So let's get on to the next order of business. That's out of the way, I hope. I probably forgot something. I should script this one of these days, but what are you going to do? So the next order of business here would be the reports. And oh boy, do we have some reports and news today. This is actually sucks. Retail sales, 7:30. A whole raft of Trump speaking starting at 8:30, and interviews with this. He is in France at the G7, but they are televising, and he's imprompting all of these interviews and press conferences from there at 8:30 in our morning, right at the open of the RTH trading session. So beware. Then we have the Cushing crude inventories, which has been quite meaningful in view of this Iran situation and the Straits of Hormuz. And then we have the all-important FOMC statement, which arguably is one of the most important releases that we have, probably just behind the non-farm payrolls. But that's kind of taken a back seat because of the lack of credibility with that number now. So it's basically a good day to stay in bed, go for a bike ride, whatever you want to do. There'll be a lot of volatility, I suspect, and there will be, a lot of, for example, my broker, which is AMP Futures, they raised the intraday margin requirements to 25% of maintenance for 4 events: PPI, CPI, non-farm payroll, and Fed rates. So this will be elevated intraday margin until 1300. For an example, that's how important they and other brokers feel about these numbers. And this is Kevin Warsh's first, first square dance, and he we're going to really, all expectations are for a rate rise, increase, and we'll see how independent Mr. Warsh is going to be, or whether he's going to just be a lackey suck up. It's going to be a real moment for him. I think this will make or break his, I believe this will make or break his tenancy as the Fed chair, because it's going to tell the world immediately whether he was accurate and truthful or not. I think. Maybe I'm wrong, but that's my opinion. That's certainly what I will make of it. And it's disappointing because, we've now the FOMC, now the non-farm payroll numbers are questionable because the man that was in charge was fired, and in came somebody from the White House, and all of a sudden, wow, the numbers just suddenly got better. Wow. I don't think you have to be a Sherlock Holmes to figure it out. So we'll see. In other words, 7:30, 8:30, 9:30, 1300. Yeah. And with that bit of good news, let's get on to the pre-market here. This is yesterday's RTH session. Open, close, open. The ETH that we've traded so far. Now, technically speaking, our inventory is 100% long, because there's the close, basically, or the open, basically, and we're above that all day, all night. Didn't get out that way. It would have required selling low, or selling down from the RTH range yesterday in order to get balanced or negative inventory. But typically speaking, if we have long inventory all night in the ETH, what would you expect? If you were long and had profit, what would you do? Most people would take some profit, so I would expect responsive selling. But I don't know what's going to happen in this intensive news day. There's never been a day like this that comes to my mind immediately, especially with all this stuff from POTUS at 8:30, and then he's got several different meetings scheduled along with the day. And I think I forgot to mention something here on the news, but I'll go over it later in the day. I have two news sources. This is investing.com, which only focuses on the real economic reports. Filters by any place you want to be, and free. The other source that I use is Financial Juice, which pulls all these non-typical events into the schedule, which allows us to manage our risk, and that is the key job for a trader today, is to manage risk and preserve your account. And then this is a squawk box. Sorry about that, I forgot. Back to the pre-market. So this is Investor RT. It's my charting package and where I do my statistical analysis and vetting of trades, my homework, basically. Notice first that in the header is the instrument, the periodicity, the chart type, and the session of all these windows. So if you're ever lost and I'm not talking or whatever, you can tell exactly what you're looking at. There's a watermark that's sometimes hard to see. Now, this tab is my micros. This is the same tab, similar, but for the minis. Trading micros, so let's stay there. This is the micro ES, micro NQ, my higher time frame or micro composite chart for the micro E-mini. And again, this is the micro daily candles daily session. So what that means is that each one of these candles represents one full RTH trading session. Wherever price overlaps, I pull the volume profile around them, and that generates a micro composite volume profile, micro composite POC, etc. High and low volume nodes, high and low volume nodes here, which are, I can't show you very easily on the current one because it's so small, but these high and low volume nodes are represented by red and green lines, and the values are pushed automatically to bookmap. This is the current micro composite VPOC and micro composite volume profile, because there's the giant gap up and we didn't close it. So there's no overlap here. So a new one starts up here. Now this may be right, this may be wrong, but this is the way I do it. This is my virtual trading journal. And my aim here is to be consistent, and I explain it, I hope, clearly, so that if you want to do something different on your side, please go ahead. But I just try to be consistent. I'm not saying this is my way or the highway. I'm just illustrating, in real time, live, what I do, and then go from there. This is the market profile, and I don't change this one from micro ES to mini ES. I just change between RTH session and ETH session. I don't think it matters. The session prices here also push automatically to bookmap. And let's look at something. Let's look at the volumes now. Ooh, look at there. 58% of volume of the average volume, looking back over 20 trading sessions for this time of day. 58%. What does that mean? The first thing that comes into my mind is we're going to have high volatility because it's so easy to shove the market around when it's such low volume. That's just my thought. And don't forget that we also rolled over this Monday. So this is a new contract. This is the U contract instead of the M. Yeah, a lot of stuff going on. There's this memo of understanding, MOM, that they're supposedly, I suppose that's going to be the thrust of his news conference at 8:30. I don't know. Remember that that's just it is not an agreement about the situation in Iran. It is an agreement by America and Iran to have talks. I think that's been missed in a lot of the spin that's gone on. But that's the reality of it. This thing is not going to suddenly get over with. Even if they suddenly stop everything in the Straits of Hormuz, it will be 6 weeks to 2 or 3 months before they get any mines cleared. None of the shipping people who have gotten their boats out, their ships out, are of any are expressing any indication that they want to send them back in for another load until this thing blows up, is completely signed and settled. So I don't think we should be expecting some dramatic, oh, yay, the sun's coming up, let's put on a play, I'll make the drapes, I don't think that's it. And I also think it's important to remember 4 months ago, there was no issue in the Straits of Hormuz. There was no shortage of helium or fertilizer. There was no supply chain drama, nothing. This is all because Israel and America attacked and bombed Iran in the middle of the night. Iran was not attacking or bombing anybody else. There was no problems in the Straits of Hormuz. Yeah. Hezbollah has been giving Israel crap for 40 years and vice versa. I'm not saying it's good. I'm not saying it's bad. But I think it's important to remember that the issues in the Straits of Hormuz and the current issues in the Middle East around all these shortages are a result of America and Israel attacking Iran, not the other way around. And that's, I think it's important to be rational about that. And that is also going to play into how this resolves itself. So Now let's look at, let's look at Bookmap. And here we have Bookmap. I hope you understand Bookmap. First of all, this is the yesterday's RTH session. You notice Blue Boy here. I put this blue top secret indicator on the first print of each session. And this top secret indicator is a vertical line. But it's really helpful to me. I don't know why I didn't think of it a long time ago. If I glance to the left and I see Blue Boy right there, and we all know that this is the inside market, this is actual tick data right there. This is the market happening in front of us, here and now. That is, without question, the complete overnight session to this point. And I know exactly what the context is. No question about it. That's the theory. So, Bookmap. Columns right to left. Micro composite column. This is where I enter manually various levels and things from the micro composite chart in IRT, from this guy right over here in IRT. This is the full session volume profile, which started plotting at 1700 last night and will continue through 1600 today. This is the volume profile and delta for the RTH session, which will reset this morning at 8:30. My statistics column, which is extremely important to me, and my session prices from IRT. Then I don't have a dome here anymore, but I have the key components. The liquidity, the full liquidity or level 2 book from the dome, which is, these are all the ask and these are all the bids at every price level. There's no indicator on my IRT or Bookmap. There are only a few lines. I believe in the keep it simple, stupid principle, absolutely. Volume, price, probabilities, and statistics, period. These are just graphic representations of what you see here. So, there's a VWAP for the RTH and the Globex, volume weighted average price. It is calculated, so I guess technically you could call that an indicator. POC for the RTH, POC for the full session or the Globex. Little different color yellow there, so to keep them differentiated. Now, POC is nothing more complicated than the price at which the most contracts have traded so far in the session. So far in the full session at 75.92 half, we have traded 4,390 contracts. This nanosecond that one of these other price levels trades for 4,391, this yellow line will move there because this yellow line is just a record, a visual record of the price. It's just the price. You know, you don't need the line to know where the POC is. The POC has got nothing to do with the yellow line. It has to do with the fact that this price is the most traded price so far in the session. Then there's a few other things that come to play that are just, these lines are just driven by the data of the price, session prices, that IB low or high. Nothing more complicated than the low and the high of the first 1 hour of the RTH trading session, period. That's it. That's how I do it. Now, really important for me are the statistics, and these are the statistical probabilities that these associated session prices are revisited by price today. So that gives us kind of not targets or hard, fast lines in the sand, but very definitely suggested areas to watch. First thing I need to do every day is establish the statistical open type. And that is really simple. There's only two criteria. If we opened right here, right now at 98, how would that compare to the previous RTH close? Well, there's the close. Oh, that's low. I'm sorry. Hold on. Nobody moved. The close is hiding back here. There we go. So it's higher than the close. How would that compare to the previous RTH range? Well, there's the low, previous RTH low. And up here, I think you're going to find the previous oops, that's ETH high. Well, up above us, because we can see our volume profiles here, is the RTH high. So again, today, we're going to open higher in range. Now, what I would do had that changed is change that title this way. And I keep the title accurate every day because when I look at a screen snap or the stream, I can see that I can just glance at the title and I know right away the configuration. Higher in, higher out, out of range, in range, gap up, gap down, or, either way. Next, we're going to clear these statistics because they're from yesterday, and we'll go get the ones from today. We'll do that in a minute because I need to do something else first, which I do every day, and that's the TLab snap, and I do that at about 8:20. So bear with me while I do that. And then we'll get right back to the statistics. And I'll explain the TLab snap here in a second as soon as I'm able to talk. And I'll do that. There, boom. Okay, the TLab is a bookmap Discord chat room. Obviously provided and funded by Bookmap, but it's created, or I don't know what you call it, by a guy named Tom, and led by a guy named Tom B, who's been trading for 48 years. Started out professionally managing money, and now I would be shocked if he still manages other people's money, but I'm sure his account is more than sufficient. Anyway, it is a Discord chat room, and it is, first of all, it's not a trade calling room nor a live trading room. And primarily it's just a good, Tom provides philosophies and theories and does kind of a live stream every day for about an hour and a half where he goes back and starts at the beginning of the day session or the end of the ETH session and kind of recounts what's happened in the market as it goes along. Not live or no live trading or trade calling. That's important to know. But a good bunch of people, and I was pretty active in there until I started the stream long ago, based on a suggestion from Tom to focus on my market and my trading rather than yucking it up somewhere else. Right. So that's what I do. And then because I'm not a very multitasking person and I need to focus on stuff, that's where the stream came from. And and the reason I stream it is because it's completely accountable and fully transparent. So this is the snap that I put in the TLab every day at about 8:20. And this gives all those folks in there that don't have similar charting the levels they could want. Now let's get back to Electric Avenue. Let's get back to the statistics. Here's where we get the statistics. Yesterday we were open higher in range. We will do so again today. The way this study works the system works is very simple. The system looks back at the most recent 1,809 trading days. Of those trading days, we opened higher in range, 561 of them. Of the days we opened higher in range, we revisited the overnight volume point of control 452 times for 80.6% of the time. So, overnight volume point of control, 80.6. And I want to do something else really quick here. I want to refresh this, and the way I refresh this data is you hold down the shift key and click this little guy right here. I don't have this set up to refresh automatically all the time, but and you see that it's just been recalculated, and so I want to make sure these are correct. The next value is overnight high and then overnight mid, and I'm just going to go down the list. Overnight high is 74.7. Overnight high. Where did you go? Right there, I think. Yep. Mid 74.2. Previous close 69.2. Where did we go for the close? Down here, 69.2. IV high, previous POC is 66.3. It's kind of weird why that is there and not down here, but I know why, and I don't like it. In case you're curious, yes, this is the POC from yesterday's RTH session. But during the overnight, this column continues to add in data from the full session, and I don't know how to stop that or do something about it. I've asked Bookmap, and so because this POC is calculated on this column, as long as this is adding in volume, it's going to move the POC down here, which is incorrect, by the way. IB low is 59.8. Well, there's the IB low, and we've got all kinds of numbers up here, so I'm not going to... Let's see if I can separate it out somehow. First of all, that goes up there. And let's put this right here, 59.8. And I want to do that for a reason. IB low. Why do I put the initials? Because the minute we open, this line is going to disappear down below price. And that's that. Overnight low is, how low can you go? 48.2. And we're sort of running out of levels here. And we're running out of time. Well, we got 3 minutes. What else is previous low? 34.4. Where is the previous low? Way below us down here. Where did previous high go? Overnight low, previous high. Okay. So that'll have to do for now. We're going to open in about a minute or so, 2 minutes. Let's call that square for the levels at this point. Now, I can't really put the session here that I want at one point because we've had such a dramatic fluctuation. It would be off the scale. So here we are. There we go. So there's 1 point on the scale on the price, which is what I was looking for. We have our primary statistics in there. Notice that these are dynamic, right? So there's that. Okay. We're going to open here in about a minute. Let's fingers crossed this damn thing resets on time. Remember, 8:30, Trump. I'm off, hands off. I don't even have IRT or Bookmap set up to trade. I don't have the trade control panel activated. We'll do that after the open. But, you know, stand by, stand back, whatever. Not a political comment at all, but I hope that if you're alive and have been trading, you have realized that there's a high probability that there could be some comment or something come out of anytime Trump especially is around a microphone or his Twitter or whatever you call his social thing, that there could be a big risk to the markets in terms of fluctuation, whether it's, you know, transitory or real or not. So you need to guard your risk, and there we are, and there's our open.
Slow computer.
I'm doing them manually because I'm sick and tired of waiting for this thing to do it itself. Okay, there we go. We're open, boys and girls. Yay, us. And now the press conference, I assume, is starting. So, oh boy, what a joy. Let's look at let's do the next step I have to do, which is change the session from full session to RTH. And I do that to keep the various levels aligned properly. And this will have a little while getting its crap together over here. Real light volume, remember, and I am sure there's been a big bump in volume immediately on the open. I do this to keep the various session prices in proper sequence as they're expected to be. I share these session prices with anybody that wants them, by the way. I publish them from 1700 on Sunday evening continuously through 1600 Friday. And I share, it's a CSV file from Google. Miss how it's distributed. I share them with anybody that wants them. So if that would be handy for you, just drop something in the chat and I'll be happy to hook you up. Okay, there we are. Day before yesterday, today. The new volume profile. Here we are, market profile. Here we are. Yesterday's RTH session, gap up, almost closing the gap already to here. This is a MES, and this is the MNQ. Same story. And now we'll start looking at the data, but until you see now why I marked the IB low from way up here. It's now down here, and it's got to move some more to get below here, but the market's moving fairly quick. These levels push about every 30 seconds from IRT to bookmap. All of these things are pushed from IRT. The high and low volume nodes, the session prices, and these resultant lines. Now, these levels here are from a trade system in IRT, which I'm focused on now, the initial balance EF, which is based on actual trading data from the Edgeful data analysis tools. Trying to lighten my load for coding because I'm an old cowboy from Montana, not some whippersnapper code guy. Gen whatever. And my goal is to be a successful, consistently profitable trader, and trade based on statistics and probabilities, not a code expert for IRT. There's nothing wrong with that, but that's not my goal, right? So in order for me to, and I only trade vetted setups and trades. So in order to do that, I'm trying to find a more expeditious method. Here we are. There's Blue Boy, and we're going to put a new Blue Boy on here at the 8:30 mark for this current RTH session. Oop. That's close enough, I guess. So here's our reset. Why are they not the same? Because it didn't reset exactly right. You see how the volume is, max volume at this price so far is at 57.87.5, and there's the POC for this RTH session, which is the bright yellow. The dimmer or more muted yellow is for the full session, which is right over here. Everything's working, isn't it cute? And now we're ticking off these. We're ticking off the session prices and the statistics. We've already set the overnight VPOC, because here's our open POC. Here's the previous close. So this is the gap up. We haven't closed the gap. I'm kind of tired of putting those gaps in there because for me, outside range makes a difference. I don't think if we open within range, the difference in gap from the close to the open is that big a deal, but maybe it's just my perception. That's highly, highly possible. Highly Selassie. What is going on here? Why is yes, okay. I got it now. Okay, so we're off and running, and it's news time. Be careful. Trump should be, full microphone moment at this point. Let's see what's going on in news world over here. There's the market on close and balance. He's having his, well, let's refresh this now. Maybe it's changed. Here we go. Here's a Trump press conference on Iran. So that's even a bigger deal. Notice that all of these things here are pulled into the market, into this financial juice calendar, and I appreciate that very much. I also appreciate that investing.com does not do that. Now, they did this long scheduled press conference here since yesterday night or day before has been pulled in, and that's unusual, because it presents to everybody a potential risk to our auction. Financial Juice does this on a daily basis, and you notice they've got these other ones pulled in here. So I appreciate that from a point of view of risk. We are risk managers. The most important thing we can do as traders today is preserve our account. And the fundamental way you do that is risk management. If you don't know about a potential risk, you can't mitigate or manage it. So I appreciate it when they pull those things in there. That's why I use these two news sources. And also Walter Bloomberg. So that's where we are. And we'll look at the data here in a little bit once the dust kind of clears. Make sure everything's plotting along. Real tight range. What are we, 84 to about 10 handles or so? Well, 84 to 96, because we opened up here but just dropped straight out of it. Reset this, get rid of that. Whoa. Come on. Wow, you son bitch. Now it should be even. There you go. Okay. We can start looking at the data, because I'm not going to be doing any trading. I haven't set up or activated the trade control panel yet, nor have I talked about how to do that, because I'm not going to do anything with this news conference going on. I think that, remember, managing risk is important, and this is a high risk potential. Not good or bad, no comment, just from a point of view of risk management, you need to be aware of risk. Simple. Very, very simple. And this is not only is today a humongous news day, this is also a short week. This is a holiday on Friday. What a week, huh? Rollover, G7, Iran, Fed rate, and a holiday. Wow. Good day to be, sailing, horseback riding, chasing girls, something. Good day to be doing some of that stuff. Swimming in that big vat of money like Scrooge McDuck, something. Well, we are just ticking them over. Push that IB high and low out a little bit. Balanced profile. Pretty much delta heavy, looks to me like. If you just look at the delta over here, this is all sell delta. Not a hell of a lot of buy delta going on in there, which always makes me kind of confused about how it's bouncing up and down. But that's how this column is derived by net delta. No school runs or any kind of distractions today. Yeah, well, about noon I've got to go to the bank, but Notice how I mentioned something about responsive selling to take profit? Well, we sold right down basically to pretty damn near the open. Well, the close, yesterday's close, we came exactly to it right there by a tick, missed it by a tick, closing that gap on the open. I'm not saying I'm in kind of a, fortune-telling wizard here. I'm just saying that's what happened. But I did say that before the open. And this is, I'm sure, being, jammed around by what's being said in the news conference. So how can you, unless you're, on the inside track and getting the special secret tweets, where you know what's going to go on, best to stay clear, near as I can tell. So let's start looking at the general state of things here. There's where we close that gap, right? And there we are. There's the open. There's the gap close within a tick right here on this big spike down. And now we're trading them up. Going to take the overnight mid, which was the next order of business as far as statistics go. And there we go. These are not lines in the sand are hard targets, but they're pretty freaking, you know, they are a high probability because of math. It's not magic or, you know, it's statistics, math, period. Let's push these out. Now we're at 15 minutes. Pretty quick. Once I get some time under our belt, we'll get it to 5 minutes down here. And Blue Boy, we don't need to see Blue Boy for the overnight anymore. We got today's RTH on duty. So let's start looking at the setting up our data for the day. How's our volume looking? Remember, we were 58%. Well, we've dropped. We're now 57.2%, but we're at 4 points average true range on a 1 minute candle right here. But the volume has dropped, and it's dropping. It's just dropped 1% while we're standing here looking at it. That's spooky right there. That is, be careful in my thinking. So let's start with, first of all, let me explain that in IRT is where I do my statistics, build strategies, and test them, forward test, back test, whatever. This is the first one I've done a long time ago, some time ago, and this is the initial balance. It goes both long and short from both high and low. It's hard-coded to these zones. No zones are being plotted over here yet because it's not 9:30, which is pretty obvious, isn't it? What is going on here? This thing is not wanting to play nice. Come on. This lag story is driving me crazy. Anyway, this was yesterday. Here's today so far. Now, these are the rules required for this strategy, this trading system. And these rules and the outcome have nothing to do with this chart, or I should say this chart has nothing to do with or any impact on the outcome of the system. What these charts do, this one and the other one I'll show you in a minute, reflect, hold on a second, I gotta do something there. Keep forgetting to do this. There we go. This is how I back test and forward test and identify that a specific strategy with specific rules for entry and trade management has a positive edge or expectancy or not. And then if it does, take that every time it presents itself and lean on the law of large numbers. That's not some system or strategy or idea that I cooked up or that came to me in a dream. That is from reading and studying the top hedge fund managers and traders in the world, historical and current. Jim Simmons, Thorpe, Peter Thiel, no, not Thiel, not that moron, Peter Brandt, Tom the Trader, Tom B in the Traders Lab. I mean, from Rod and those guys, you know, from local people we trade with every day to the most successful traders in the world, identified and realized that the market is random. Trying to predict where it's going to go is a fool's game. Millions of people are expressing their opinion at any 1 second in this market. It's statistically proven. Just look at the price. It can only go up or down. That's a binary event. That's a coin flip. Now, using the way to approach it systematically and from a probabilistic point of view is to identify something that happens frequently. Obviously, you don't want to build a system based on something that happened, like Christmas Day. It was once a year. That's not going to get you too far. Daily is great. Within interdaily is even better. The IB, for example, which is what I chose first, happens every day. Now with the Globex stream, which I have going on at night for this last 3 weeks at 1700, I'm also looking at the opening range breakout for the Globex and the Asia sessions, which is essentially the initial balance for those sessions. But happens every day, every session. You can set specific rules around the criteria for the entry and trade management, and then you can identify mathematically and statistically if it has an edge or not. And that's what I'm doing over here. This is what this is. Housekeeping, rules, trade management, essentially. This was based on something that Rod and I cooked up. I was talking with Rod and those guys in Static about how to set this up and code it to start as a starting place for how to identify and statistically vet a system. And we decided, well, make it 3 to 5 points above the IB, 3 to 5 points below. This is continuation, this is pullback, and the trigger zone is 1 point either side. So in other words, price comes up, breaks the IB, goes to the continuation zone, pulls back to the trigger zone. That'd be a long. Other way around, it's a short or mean reversion. So I went with it. I have to start somewhere, and that's where this derived. Well, this took me forever. And so I'm trying to use a different system now to eliminate most of this. And here is the current thing that I've done based on still the system that is developed here. And if you are looking at these titles, you'll realize that these are pieces from the original that I was able to just kind of use as generic puzzle parts to fit here. And this is essentially the Edgeful IB trade. And here's the IB high. Here's the IB low. That's the range. And these are percentages within the range, 25% of each one. And the entry, stop, and so on are based on these probability of these percentages as opposed to the hard fixed ranges, zones from the previous study. So that's where this comes from. And you'll notice that these prices or these percentages right here. Well, look at what's over here. There you go. There's the high, 25, 50, 25, low. That's, I can push from Bookmap to, from IRT to Bookmap when I'm interested in taking a trade. So that means I can trade live on Bookmap right here with these levels focused on Bookmap. Okay, the next step then is to where do these data come from? Hold on. All right. And, be aware that this conversation is usually later in the day, but since we're having a news break, and I'm going to just do it now. So let's move on to where does this data come from? Well, Edgeful is the new idea that I'm leaning on, and we could start with, there's a whole lot of tools here, and I use a very few of them. What's new? The first thing we need to do is change the zone. This was from the Globex last night from Tokyo, of the Asia session. Let's go to the Chicago cash, which is 8:30 Central Standard Time to 1500. Boom. Now, let's look at, let's look at the right report, shall we? And that's the opening initial balance. And let's look at the typical initial balance trade. There we go. MES, 6 months. I want to change this from New York, excuse me, to Chicago cash. I don't know what's going on in my throat. Excuse me. I'll go get some hot tea. That'll work. Now, what does this chart tell us? First of all, that the initial balance is forming. We should know that, I hope, because it's the first 1 hour of the RTH trading session. The initial balance high will continue to go up with price. The low will go down with price for the first 1 hour. Remember the definition in the pre-market. Nothing complicated. I think the reason the initial balance levels seem to be so mysterious to people or whatever else is the naming. It's an old market profile term, IB, for initial balance. I don't know who came up with the fact that to call it initial balance and why they made it 1 hour, but that's what happened. So there you go. And that's why I differentiate between the initial balance, which in my world, in my mind, is in the RTH session now, and the opening range varying in time frames from 1 hour, 1 minute, whatever you want to do. I consider that in the other sessions. Some people trade the opening range breakout in the RTH session, 1 minute, 3 minutes, like that. And so I believe that they are correctly referring to it as the opening range breakout as opposed to the initial balance. That's just me, okay? Here we're going to go down and tag out this close again. Look at him go. He's not saying something that they like to hear, in my opinion. Back to the data. So, no days filtered, no anything other than the time. 76% of the time we had a single breakout. 23% of the time we had a double breakout. And 1.57% of the time we didn't break out either high or low. We stayed within the IB all session. In the MES, looking back over 6 months, in Chicago cash, 8:30 Central Standard Time to 1500. You change this to 1400 or to 1600 down here? 8:30, and they don't use military time, sorry. You change this to that extra hour, big change over here. But we don't trade that hour, so here I am. Here's, all the stuff, all the occurrences that have happened and a lot of things. So press on. Standard. Let's go to buy weekday. Big difference. Monday, Tuesday, Wednesday. Now 80% probability will break one. 15% will break double, and 3%, almost 4%, we won't break out at all on Wednesday. Thursday, Friday. Look at Friday, huh? 92%. Okay, so there's where we are on the weekday. So what we're doing is just narrowing down the filter. We've closed the gap some more on that opening range, and we're actually pushing lower now. I'm so happy. Previous lows down below us at with 34 handle, and I'm guessing we're going there without question in my mind. Not a prediction. Just look at the price. Look what we're doing. Nobody likes what they're hearing over here, in my guess. Back to the data. So, by weekday, initial balance breakout on Wednesday, 6 months, MES. This is what we should expect today, that we will have an 81% probability to break one side or the other, single breakout. Only 15% we break both sides, and 3% we don't break either one. Now, the next thing that I do here in getting ready for this, we're going to keep filtering. We're going to keep narrowing the filter down like we're going down the funnel, right? The next thing I do is I open this handy dandy tool, which is really cool, and I had never used it before. The reason I started recently is because I discovered that Edgeful provides all of these indicators free if you have that subscription, which I do. And I thought, let me check this out. Boy, this is the handiest tool there is to for just quick reference. And so here are these Edgeful indicators. First of all, there's the sessions. These are the opening range breakouts, which I've got dialed in for my Globex stuff. And here is the initial balance, and here's today. Right now, there's two indicators here. This red line and this box indicate the opening candle continuation, which kind of determines the bias, in their opinion. The opening range high and low, and the session and the zones. Now, it's important to notice that the opening range high was put in first, and then the opening range low. Right there was, you see that high is before the low. And that's a big deal with this, with the data, which level was formed first, or, second, however you want to look at it. Right now, we're still plotting. We've got a 21 and 3/4 point opening range or initial balance so far. So these are about 5 points each. So if you got off, if you were looking to front run, or you got some statistic that said from the 50% zone to whichever break, that's 10 points. That's reasonable. That's enough meat on the bone for a trade, in my opinion. And that's how I use this indicator here. We'll go through it a little bit more. So the next thing we're going to want to do here is move this down to the rejection report. And here we go. The 60-minute initial balance high was formed first. We just looked at that, right? And we know that that's the case. And if you want to look at Bookmap to confirm that, you can also do that. There's the high, and it's before the low. Changes continually, can change continually through the hour, but that's where we are right now. There's the high. It was formed before this low, and so there you go. That means the initial balance high was formed first. Now we need to do some customized settings here based on, got to change this to Wednesday. Got to get this back to 0 because this is from last night. So with the initial balance high formed first on Wednesday, with no ending zone data, 7% probability or 8% probability we break the IB high first, and 84% we break the IB low first. Now, a lot of people get all, their spidey senses get all twitchy and icky here because they're going, oh, baby. So we're here at the 50% mark. I'm going to go long and front run this baby for the IB low. You could. I don't think that that's got a high probability myself. And you're talking 5 points in every one of these divisions, right? So if you got up here to the 50, like right there, and you got short, you're looking at 10 points down here to the low, and that's okay. But that's gambling and not probability, not really trading a probability as I see it. So what we're going to do is we're going to stand by for the ending zone or close to it, which can make a big difference. And I'll show you, first of all, I'll show you what that means, how that is determined. And it's better for me. I think it's actually easier to watch here in TradingView. So the ending zone is determined by the closing price of the last candle in the initial balance range. For example, if this were the closing price of the first 1 hour, the zone would be, we put in the IB high first, so you start assigning the probabilities for the zones from the opposite side. This would be 0 to 25, 25 to 50, 50 to 75, 75 to 100. And so if it were closed right there, down here, come on, or up here, okay, whatever you want to do, bashful guy. This would be the 24 to 50 zone. This would be the 0 to 24 zone. Let's pretend that it's the 24 to 50 zone. Come back over to the data and we can put that in over here. Now watch these probabilities. Watch this one right here. 885. Here's the description of how this is determined, and I think you'll see that I got it right. So let's 24 to 50. 0 and 100. Quite a change, huh? Looking back on the MES over 6 months, filtering the data down the funnel. Now, we're going to put this back because we're not there. And there we go. That's how I believe you should use the data. And then the next step can be the pullback or the retrace after this has been accomplished. Hello. I hope I had the right pictures going on here, and I don't think I did. I'm sorry. Let's do that again. Son of a bitch. We'll imagine that it's 25 to 50. We'll save it. 0% we break the high, 100% we break the low. When the IB high was formed first, and that can change at any point in this first 1 hour, as you know. So there we go. And now I had the right screen up. Isn't it fun? Isn't it cute? Hey, Antonio, or Anton, how's it going? In case you aren't aware, retail prices at 7:30, Trump press conference at 8:30, Cushing crude inventories at 9:30, and Kevin Warsh's big day with the Fed at 1300. What a day. That's why I'm doing the stats and stuff right now, because I'm not going to get near the damn thing, and Trump is all over the place, I'm sure. And this is not just some BS around G7. This thing at 8:30 is billed as a press conference about Iran. So, you know, Merry Christmas. I hope you had a great evening, and yeah, I'm liking this trading thing. Couple of, these $700 days add up. That's pretty good. Now, I was just going through the funnel here of how I approach this data-driven trading idea in order to, and how the TradingView thing works. So you know all of that inside out, probably better than I'm sure better than I. But for the sake of the stream, and here is this system over here. And the way this system will trade, by the way, breakout is open inside the range, close outside the IB high or low, breakout. And now on Edgeful, they call a breakout to the long side and a break down to the short side. Okay, I just say breakout. Anyway. Then the trigger is a pullback to the 20, between the 25 and the 50 for the long, and between the 50 and the 75 for the short. That's just arbitrary. I just pulled that out of the air. I don't know. I haven't looked what's going on over here. Great numbers in all categories for the U.S. economy. Jesus Christ. I wish I lived in his world, because boy, it must be wonderful. You know, it's like flowers and lambs and girls with big boobs, and you know what I mean? It's everything's perfect. Oil prices are tumbling down. Wow. Of course, this is just all spin, I think. If you look at the numbers, this is going to be the biggie right here. This is going to be Kevin Warsh's big day. Is he going to be a Fed chair for an independent and data-driven Fed, or is he going to be a lackey suck-up? I think that's my interpretation of what's going to happen today at 1300. I think we'll know that. He's pretty eloquent, and he's had a lot of experience, you know, spinning stuff, so I'm sure it'll be an interesting speech. But I think the rate will make the difference, whether they raise them or not. Just my guess. This is crazy. The estimates are, by other countries and those involved, at least 6 weeks to 2 months minimum to demine and have everything opened completely. None of the major shipping companies, I should say this the other way, all of the major shipping companies who are finally getting their ships out of the Hormuz, through the Hormuz, have said categorically that they're not going to send them back in until not this MOU, which is just an agreement it's an agreement between Iran and the U.S. to have talks. It's not a peace deal. It's not signed. This is what people a lot smarter than me have determined, having read it. So what this is we agree to have talks. And they are saying, and the insurance companies are saying, no go until it's a signed, sealed, delivered deal. Really. And the big wild card is Israel, of course. So I don't think any of these things, though they sound great, and I'm sure there's a certain group of the country here that are going to be sucking this up like honeydew vine water. Yeah, those levels look right and sound good to me. And wait until this news mess is over. Yeah, there you go. So we'll see. Now he's going to sanction Russia. He figures this is all done behind him. He's moving on. Good for him. I really wish I lived in his world, boy. That would be great. That would really be great, wouldn't it? Damn near got to your 75s down here. This was the gap close, of course. That was actually right there. They actually closed the gap real early, within a tick. This is the day of the week now that I don't have any runs to make, and I'm thinking, oh, this is going to be great. And then I wake up there, well, I went to bed seeing the news, but like, son of a bitch, every hour and a half, there's some craziness going to hit the market, all the way up until 1300. And it continues to rain and is dark as night. And, if it weren't for the stream and needing to trade and make money, I think I'd just stay in bed with a pillow over my head till it is over. Probably a good thing that I do have these commitments. I'm thinking pretty serious about letting the, how much further I'm going to continue this drama or this exploration into the Globex, because it's just, by the time I'm done, it's like 20 something hours of standing here, and there's been essentially nothing of interest, in my opinion. And I think it's based on, you see, here we go. Here again was last night. Nothing, no breakout. We broke out fairly quickly after the Asia, but didn't retrace to the 25 and didn't do it until 10:30 or something. I'm not here to stay up all night. And I do believe that the difference is good for you. Oh, that's perfect for the ground. Of course, you're going to get your lawnmower a workout, but great. I do think that, as I mentioned yesterday, I think the difference with what the people that are trading these are, how they're looking at is they're working them on the Qs or the NQ, which is substantially different. So I don't think I'm going to, if I do continue looking at the Globex, it's going to be just the Asia. This is not turned, in 3 weeks now. This is the third week. There's been nothing here. So, and not only is that boring and tiring, but it's dangerous, because, as you know, in a weakened state of tired and bored, you can start seeing patterns and making stuff up, and monkey boys, jumping around the room, and a whole lot of not good. And now, if we come poking up through here at any point and take out the IB high, that will flip our stats around. At that moment, the IB low will have been formed first, not the IB high, which will turn all the data upside down. That's why we wait. And all of this is just different ways of interpreting the data, right? I mean, here's the same thing. Here's what we're looking at over there in Bookmap. Bookmap style. Gangnam style, baby. Whatever happened to that guy? Those one-hit wonder flashes in the pan, that's, I mean, good for them, but it's funny how, what do you suppose ever happened to that guy? I don't remember Florida having a flooding problem either. The closer you get to the canals and the intercoastal, you've got all those, you know, the canals absorb all that stuff and then out to the ocean. So I don't remember them having a flooding problem there. And it's not much flatter than here, or, you know, here is not much flatter than there. Here, the problem is this size, you know, I mean, so much bigger, and probably the soil and percolation. There's the Everglades, you know, they take up all that water. Well, I don't have that problem, as you know, from me standing here days on end. But, you know, at least I've got that. Whether it's a fear thing, I don't know what exactly motivates it. But, yeah, I don't have that problem. I'm still pissed at my. I even went to Bookmap Help, and the way I interpreted that dialogue requirement for market orders was correct from what I read, but it didn't work yesterday. I tried it to protect myself from mistaken fat fingers over here in the active data column, and it did not work. And I've got the recording to prove it, because the order was entered with no dialogue, and, you know, I flattened and killed it quickly, but pissed me off. Which reminds me, I had better. It would probably be a good idea to be able to trade, wouldn't it? And the way you do that with Bookmap is as follows. You activate the trade control panel with this little padlock button. That opens up this trade control panel, TCP. Then you select an account. In my case, I'm using these Lucid accounts because that was the fastest, cheapest way to de-risk, be able to maintain this, you know, trade this and develop this hedge strategy for trade management, and still have profit, you know, a profit potential or revenue potential around it. In this case, 5 micros. Okay. You can then close this button by clicking it again. Because it's activated, it stays green. You get all the metrics, and you get cancel and close, or close and cancel and close, whatever. Then the next thing I need to do is make sure I've got the multi-account on. These are all active from last night, so that's why I'm not having to change anything now, and this should be on Lucid, and it is. The reason I'm not trading my live AMP account, well, first of all, today I couldn't trade it because they have raised the margin requirement to 25% of maintenance. So instead of $400 for a intraday micro or ES, or a mini, it would be $5,000. So that can be a real surprise to people who don't know that's coming. And look at this. Oh, well, it is over. We're going to go to the moon, Alice. Here we go. Jesus Christ. Okay, so now, having set up this on the micros, we'll do the hedge, which needs to be ready to roll also, and that's over here. So this is the mini. And it is the same account, one contract. We can close them because we have the metrics. Close them. We've got cancel and close. And I am so disappointed that that didn't work. I don't want to try another experiment, and then I'm hopeful that this weekend. And by the way, Friday's a holiday, huh? So this is not only rollover. G7, oh boy, we're going to do all this. The MOU for Iran, the big Fed announcement, and a holiday. What a week! This is when you invest heavily in a distillery, and then you grab some gal and head out. Grab your gal of choice and head out. Anyway, kidding, of course. I'm going to deactivate these because I have a sneaky suspicion you can't. Maybe Bookmap has done something like, if these are activated, then that filter rule doesn't work. So I'm going to deactivate them. And I'm not in a trade, that's for damn sure. This setting, I checked with help. This is a new thing I have never seen, which is, maybe it's been, but I've never noticed it, in this new 7.7.0 build 19. Order confirmation, and what it says is exactly what I thought. If you click this, that means that any market order that's submitted will require a confirmation to execute. Now, I tried that yesterday, and by clicking up here, which is the case where I make a mistake and fat finger trying to move this price level or trying to select something, and I accidentally get inside of this zone. I tried that yesterday on purpose, and it fired the order without any confirmation. So I'm not going to do it again, but I am going to, now let's set this back up and see what we do. 5, okay. Micro, and over here. Oh, I'm on the wrong window. Sorry about that. Let me show you what I just did. God damn it. Settings. This guy here, I've activated. What this says is the order confirmation will be required for market orders, which is exactly what I want. And then we're going to go over here and we're going to reactivate this. Oops. We're going to set this back up again. Boom. Boom. Now, maybe there's some interaction between multi-accounts, or who the hell knows. And I'm not going to try it again until this weekend. I'm going to try it on replay and see if that works or not. But that would solve my problem for mistakenly clicking over here. And I've explained this a number of times, why and how that works. Notice the mouse is a $. Watch when I pull it over here and hover over the price, like I'm going to move the price ladder up or down, as I like to do. And don't notice that mouse pointer is still a $. If I left click, that is a market long on the spot. Right there. So that's what I'm trying to avoid. Because I don't ever enter with market orders. Or, so very rarely. Oh, wow. Well, I didn't know that. I don't remember that. But yeah, when I was in Lauderdale, we were living on a boat. We were on a sailboat. We had a sailboat. So we were on Isle of Venice or Hendricks Island, if you know those places, and, you know, sailing up and down. And then we moved down to the Keys, and then we moved down to Miami and lived aboard at Dinner Key and sailed Biscayne Bay and over back and forth to the Bahamas and stuff like that. So most of the time that I lived there, and then when I was on shore there after that, when I came back from Africa, I was in Dinner Key in Coconut Grove, so I was in Miami area. Whoop, whoop, whoop. This doesn't look good. What the hell is going on? Come on, Mr. Mouse, be nice. Don't mess with me. I'm an old guy. I'm nice. Well, there's 9:30. The IB is set. And it was set within the, let's look and see. Get to our zony wony over here. Boom. Okay, there is the closing price of the IB candle. So we are in the low formed first, meaning that the assignment would be 0 to 24 for 5%, 25 to 50. So we can change our ending zone to 0 to 25. Low is first. There's the high. Okay, we're going to change all the dynamics around now. We were IB high formed first. Now we're IB low formed first. And we can add our ending zone criteria. Remember, this is 77 and 23. Boom. Now we've got a 90% probability that we're going to take the IB high first. 9% probability we're going to break the IB low. Based on the narrowing down the funnel of metrics. And right here is a spot where would have been a great justified get on for a front run. And that's right here. We pulled back to the 50. Get long because you've got a 92% probability or 90% probability you're going to break the IB high. That would be a justified, in my opinion, that's a justified long. And it may be BS, but I'm not front running them. But if you were planning to do that and your trading and your data says that you're successful at that, this is the spot. The problem that we have here, in my opinion, is I'm sure Mr. Microphone is still performing over there. And that's a news risk, which none of this data has anything to do with that. Now we're back to the 25, right? We still haven't taken out the IB high. So the IB is set, it's 9:30, but we've not taken out the high or low. What we have is a data point now with the ending zone that says 91% probability we're going to break the IB high first break. Doesn't say we're not going to get them both, but, and this is low is only 9%. Let's see what's going on over here. Low was formed first. Boy, I was right. Isn't that cute? And here we are. But here we are. And I think this is news driven. So there's our data. Where am I going now? There's our data. Here is our version of that being tested over here. What do you suppose that is? I've got to believe that's news. We haven't broken out. We don't have a first rule or the trigger. And I, for one, am content not. Where is this thing? Let me get over here. I'm content not to try to front run this stat. We're a hell of a lot closer to the bottom now. And remember that these, based on this initial balance, these are 5 points each. So you can get upside down real quick. And you can also be, have your day made right there. We've had a VPOC migration south. We've got all these obstacles above us. These, in my world, in my view, this is complicating our ability to take this IB high, even though it's the data preferred or data indicated. And then the final key in the system here is to do the pullback or retracements. This, based on the initial balance high breakout. Breakout in edge fill terms is long and breakdown is short. There is a 40% probability if we break the high that they will retrace to the 25% level, 10% to the 50 level, and 0%. Wait a minute. Aha. Trying to trick me, you little tricky, will you? Wednesday. How different, isn't it? 44% will break 25, 22% we get to 50, 22% we get to 75%. That's kind of surprising. How would I deal with that trading? Well, what I did yesterday or whenever the last trade was, let's look at IRT. I interpolated between, in this case, 25 and 50, and I said, okay, here's the mid. We're between there. The stats were different, and that's how I'm trying to do it at this point, which is, I realize, a introduction of discretion, and that's not correct for statistical trading, but got to do something. And remember, we've got a 9% probability this is going to come down here and take that out. Donnie. I think old Donnie John's got something to do with it. Yeah, I don't know. And ETH low, they tick down there to the close again, and now they're going to bounce off ETH low and the close. Yesterday's close beats me. Well, I guess it doesn't beat me exactly. At a fundamental level, there's got to be, think about it, hedge funds and institutional buyers. They can't be flipping this crap around, these thousands and thousands of shares. I don't think they can be flipping this stuff around. We were talking about that last night. Are they day traders like the rest of us? I don't think so. That's what always amazes me about these market on close orders where there's billions of contracts. Are they flipping that shit every day? I can't imagine. But yeah, something's going on. Well, we are selling across the board now and heading for the IB low and perhaps the overnight low, or the previous low, which is down there at 78s. Jesus. Let me get some tea. Oop, I didn't kick off the music. I'm sorry. Nobody's dancing. I wondered why nobody was dancing. Now I remember. No music. I could sing. Then there would definitely be no dancing. Crude's out at 9:30, remember? So that's happened already. Unless some extracurricular activity befalls us. The next thing up is 1300, and that's Mr. Worse's big day. Whoa, baby, there we go. There goes 9%. Jesus Christ. Well,
The IV low is
so are we going to retrace to the 50? No, this is all upside down now. I don't know what to think about all this. So we have just accomplished this. I don't know what to think about the rest of it. So the initial balance breakdown was first. That means 75% pull back to the 25, 50% pull back to the 50. I have to think that this is news driven. Hi, Panda. You know. Or I have to think it's time for bed. I mean, I don't know. Yeah, me too. I agree with you completely. And that was my point. Who the hell is buying 3 billion contracts? Imbalance, you know? And that means imbalance. That doesn't mean that's the total amount traded. That means the imbalance was 3 billion. Could have been 5 billion total and the imbalance was 3 billion. That's the part I don't understand. I mean, and if somebody, you know, with somebody's retirement account or these people that are doing that are day trading and flipping this crap around, who's making the money? Imagine the commissions. I'm sure they're paying, you know, even cents, but Jesus Christ. Well, there's 25%. So there is the accomplishment of the 75 right there. 75% we're going to pull back to the 25 level. And there we are. Breakout low, pulled back. Another 50%, we're going to get to the 50% level up here. I don't know. Do you short it? What, Panda? What do you think? You think I should short? I don't know. As far as I'm concerned, none of this is data driven anymore because it's, gone the completely opposite way. So now, I don't know. When we had a 9% probability to take the initial balance low first with all the data filtering right there. And we did that. I don't know how much stock I would want to put in this. The IB low was taken first, there's no question about it. And there's what it says. Now we have achieved this already. But 50% probability to get to the 50% mark. 50% is a coin flip the way I look at it. God dang, I'm just, my initial reaction is to, if I'm going to be a risk-aware trader, to stand down. And here we go to the 50% line. Look at this. Yeah, that's right. That's right. Basically, 74s, but yeah. And here we go up here to the mid and the this and the that and something else. I guess I could say I was going to interpolate between the 75 and the 50% line and take it midway here and go short, and I'd be happy right now. But something's going on. I think it's still. Look at this. Oh my God, look at that. Well, boy, don't I wish I was a short. Wouldn't I be a rock star now? Look at that crap. 87 to 73. 15 handles in the blink of a frickin' eye. And now freezes. Now it just goes dead quiet. I suppose, yeah, that's what I was going to say. The data's jammed up. Wow. Magic. I was getting ready to reach for my mouse thinking I'm going to go ahead and short this up here. And this is not rearview mirror thinking because I was just talking about it on the stream live. Do I go short? And this is essentially what I did by interpolating the other day, and it worked out okay, but certainly not like this. And it's still on its head and going lower. So yeah, something happened. Something happened. Look at this shit. It's aggregating data. There's been a huge something happened. Let's see what's going on. Oh, he's talking again now. Now Trump's babbling again at 9:30. Okay. Well, that's, there you go. I guess. I mean, what is this guy said? That just dumped the market off 20 handles, 25 handles. Jesus Christ. I'm so sorry. I got to stop talking and just, now. That was a justified entry based on the data, except that the data was backwards, but short, and wouldn't I be happy with myself? I'm gonna do something I forgot here. I don't have Bloomberg up. Let's check what What's going on over there? Oh, well, that's it. 8 minutes ago, Trump warns Iran deal failure could restart conflict. Well, duh. So, Iran draft deal details ceasefire terms. A U.S. draft memorandum with Iran outlines an immediate ceasefire, reopening of the Strait of Hormuz. Well, that's neither one of those are too surprising. Sanctions relief, future nuclear talks. The proposal would restore oil flows, ease restrictions, and unlock frozen assets. Remember Mr. J.D. Vance babbling on about how we were not going to do anything and there was no cash, blah, blah, blah. Now it's up to $300 billion. I don't know what to say. And that's exactly, Trump had to jump in there and, yeah, well, there you go. And there you have it. This is why I don't get all shook up about risk events in, the news. I am sorry that I'm standing here talking and I didn't just throw a short on here. With the hedge and everything, well, of course, wouldn't have been touched and would have been a super profitable trade. But we're still having big delays on data. I'm not going to do that. That doesn't make any sense. Yeah, I was going to look at your levels here on a bigger scale. Let's look at what we got. Oops. This is so irritating. My one big day here of no zooms or dooms or runs or anything, and I'm all excited about a good night's sleep and a focused day of trading, and I wake up to the news disaster-a-thon. I knew about the stuff last night before I went to bed because it was already in the cards, but still, not this crap. But anytime, that's exactly why in the pre-market I always preference. As traders today, our first objective is to preserve our account. The fundamental way you do that is risk management. If you don't know about a risk, you can't manage it. In this case, we know about the risk. Well, maybe. I'm not arguing with you because I don't know. What I think, or what I suspect, this doesn't deal with the levels though. Oh, let me shut up. Never mind. Yeah, I mean, even looking at the higher time frame chart, which is daily RTH session, right? This is just outer space here. Here's today. And if you want to get, you want to squint your eyes real hard, you can say, oh, well, that's the high of 5 days, 6 days ago. Oh, okay. Maybe. Or it's the low volume node from way over here, or shit, I don't know. Yeah, I don't know. That's the bottom line, I don't know. What does it look like here? How about market profile? That got some secret thing going on? It did take out a single right to the tick from way back though. Jesus, I mean, come on. I don't even remember how to turn on the info box over here anymore. There's a way to do that somewhere. Let's check. Go info box maybe. Show info box. Okay, there you go. So what is this? This is the 5th of June. This was a single, and they came right down and turned it around. I mean, I don't know. It doesn't make any sense to me. But I don't see any levels anywhere that make any sense. And, we're tagged back up here to the 25 again and turning around. This was a lost opportunity right here, a missed opportunity. Big. And yeah, I realize that's really hindsight, but I was talking about it before this happened. So I feel somewhat vindicated in that. I certainly didn't anticipate this. This maybe would have been another opportunity. Whenever something like this happens, I'm always thinking, okay, they got that out of their system. Now they're going to try the other side. I don't know. Yeah, I don't see any. Well, wait a minute. Let's see something here. Let's look at all the bells and whistles. Let's see what this merry mess looks like. Well, nothing. Okay, I don't like that anyway. Let's make this 150. Well, there's no liquidity down here. It's come in here. This had some sitting here all day. But, yeah, I agree. I don't know. One of the things that we're going to keep selling them down again. One of the things that I think happens, and I noticed it on that famous Friday where Trump tweeted on Truth Social that he was going to raise, some kind of tariff crap against China because they, spit in his oatmeal or whatever the hell he was thinking. At 10 o'clock in the morning on a Friday, and the market sold off 229 handles. Nothing, no part of that tweet was accurate or true. China had done nothing. Trump did nothing. But the market was looking, in my opinion, the market was looking for an excuse or a catalyst. And when they saw that, that was good enough. And down they went. And nothing happened. Nothing. China had done nothing. Trump did nothing. Whether that was some signal from him, if you want to be a conspiracy theorist or whatever. I don't know. It seems to me like the market has what they want to do in mind, where they want price to get, and when they get any kind of a catalyst, they react to it. I mean, think about it. Yeah, no shit, Einstein. If the deal blows up, guess what? There's no deal. There's no ceasefire, there's no deal, because that's the deal. If it blows up, of course it blows up. That's not a shock. That shouldn't cause some sort of drama like this. And who's doing that? Do you think that Mom, Pop, the dentist on the corner, you and I, are probably closer to the market than anybody except the real, the hedge funds and the algos? Who can react that quick? Yeah. It sucks. Really sucks. I was really hopeful that these Globex things would prove to be interesting and profitable and try to get away from this drama. I was listening to, in the morning around 2:30 or something, that the EU session starts, and either that Tom the Trader guy or this Andy guy, come on, and I can sort of hear some talk in the background with a man's voice, and it's got to do with the market, so that'll put me back to sleep. And he's trading the DAX and the FTSE. And they're both, the whole conversation was around the FOMC meeting. It's like we can't get away from it. Maybe the Nikkei or something in Tokyo. That's why I was thinking that the Tokyo opening range might be something interesting. Well, the only people that can do that, in my opinion, are the high time frame guys. And those guys, and all of them are high time frame. I mean, Goldman and everybody has high time frame algos running now. They say about 85% of the market activity is high time frame traders, algorithms. And they're quick on the other side of all of that. But you can't tell me that there was retail guys. Well, I guess there could have been some retail and some people that saw this as a reversal and were getting along. But, this thing? Nah. I don't know. It's so easy to fall over the rational to conspiracy fence, but it sure smacks of front-running inside stuff somehow. And when you see ads that if you contribute to this, you're going to get special tweets in advance of statements. Well, Jesus Christ, isn't that advertising insider trading and front running? And it continues to go on, and it's even out there in hard facts, data, filings, and nobody says or does anything. It wasn't good enough to sell meme coins about this Fight Club crap and disgrace the White House front lawn, south lawn, whatever. But that Trump kid is trying to put a fix in on top of everything else. He must have had something going on in the prediction markets, I guess. Jesus Christ. If it wasn't so sad, it would be funny. Well, we're poking into the gap, We've got that naked MCVPOC down below at 50 at 02. None of this means anything, but you know, as far as trading from data is concerned, well, that didn't work out. I mean, it didn't work out bad, but I wasn't able to do anything, you know. This would have been a killer though, had I clicked the button instead of opening my mouth right here when I was talking about, well, I can interpolate this 50% just below there and I should get short, and then yeah, I should have. It's in the stream, look it up. But I didn't. And I'm not trying to rearview mirror trade here. So here's the breakout. Well, what a surprise. And why wasn't this one flagged as a breakout? I guess because of the data choke. I don't know. That doesn't make any sense. The whole theory about the breakout flag is that it opens inside the range and closes outside. It's not real complicated, right? It's not rocket science. And then for the trigger, we got to get up here to the 50. So this is where this is the big dump. Yeah, it sucks. What's going on over here? Well, this guy's all over the freaking board. Lost 67 ticks right there. If you want, you know, nothing happened. This is simulated. That's exactly why. This is forward testing the strategy, all that stuff. So, A, that's correct. B, that's correct. This is the trigger, which is not, because it went flying through the trigger zones like. Why that would not be a long alpha down here, I'm not real sure. But this is that big price spike. What's happening with volume? It's come up now. It was 56%. Now it's 59%. I always find, and I said it in the pre-market, be really careful of extreme volatility, because it's so easy for them to jam the market around when there's no volume. And not to sound like a wizard, but in my opinion, there's been some jamming around. Been some jamming going on today. Jammity, jammity, jammity. I hope you like jamming too. And what are we doing on the minis? Okay, they're okay. So they're holding their own. Everything's working. Well, that's a bummer, but now I'm sort of in that grays area again with no trade around the IB. This kind of nullified all of that. This was a mistaken, not taken trade. You could make a case for, well, you pulled back to the 25 again. Would that have been a continuation short? In my opinion, the initial balance trade's kind of over, like the opening range trades. They're sort of, how many times can you go back to the well? In this case, it looks like 2. You know, it looks like you can go back a couple times here. Once or twice, I guess. But I'm always leery about that. And I want to try to prevent myself from listening to Monkey Boy and making up reasons to trade. Oh, see, look at here. See, we traded back across almost to 25% again, and now we're going to, you know. those are all things that I don't, those would lead me to overtrading. When I started trading and blew up that big accounts and came back from Africa to trade, I mean, I was taking 100 trades a day. I had no idea what I was doing, even close. And I was trading equities in 1999. Think about that for a couple of minutes. Yeah, well, there you, yeah, there you go. I mean, yeah, there is a sector of the population that think differently than I do. Very definitely think differently than I do. Back to 68 again. There was a little dribble of liquidity down there, but why? Oh, I tell you why these things could be big deals. And here you go. You probably know much better than I do. How about option strikes? I always forget about that. This stop gamma or spot gamma and all this stuff they're talking about a lot. That might well be, that 60 could very well definitely have been a strike, right? Some big options thing. Maybe to do with the rollover. I don't know. That world I wish I could understand more, because it seems to be what drives a lot of the markets, but I don't. And I'm spooked of it because I don't understand it. So that complicates the problem. Yeah, I don't even know how to watch it, but yeah, it would be. That's the only thing I can think about. Is that it was something like that. Well, I'm spooked about taking a trade here now, but just remembering that strategy. I've had the trigger, I've had the breakout, and now it's heading for the trigger. It would take a trade in the simulated environment, forward testing, yada yada. This needs to get up to here for the short. Well, we're about to the 25%. Why? Who the hell knows? There we go. Boom, 25% the other way. Okay. And IRT is lagging like crazy again. 17-second lag. Jesus Christ. Unusual. Untradeable. You still watch it, but I mean, trading views doesn't lag, you know. Bookmap doesn't really, at least report it. Jesus. I don't know. I really don't know. In theory, we're free and clear from news drama until 1300. What does that mean? Who the hell knows? Now there's some talk about a surprise tropical storm that's forming in the Gulf just off Texas. It might turn into a named storm already. That's just magic. That's pretty fun. Well, Rob says he missed the short but took the overnight failure. I don't see this guy that was doing all kind of spot gamma stuff over there. I don't see that. You got a pretty thick wall there at the 85s. I get, sort of. Ow. Yeah. Damn, it's only 10:30. This drama, 2 hours of this drama, and I'm worn out. I would have to believe they'll come up and test that 85 or whatever it is. Yeah, 85. Or maybe even as high as the 90s for that price check at aisle 3. But I don't know. Is that some sort of a... Now it starts to become a signal in the with the pullback to the 25% zone again. Oh. But my original thesis for the day was that it was going to be rotational until they saw what happened. I could understand some drama like this with the Fed, but and here we go. Mid liquidity. 25% retracement. Pretty funny that I would have been out, of course, but had I just clicked that short over here when I was talking about it, absolutely no heat yet. And I didn't take the trade, nor do I know. That happened when I wussed out day before yesterday and closed the trade out too soon. It got on down to the targets without any heat. Here we go up now. There's that liquidity I was thinking about. Let's see if they make it up to the, look at them flashing at 80, at 90, I mean. And that's not any kind of super secret signal. That's because I have that liquidity set at 200. And when they add and stack above and below that, it comes in and out, I guess. I just notice it. So I like to think it's really important. Well, I'm sure somebody knows all about what's going on here. Maybe Tom Stream, maybe he'll shed some light on what this was all about and these levels down here. I don't know. Yep, price check at aisle 3. Right now, I would say shorting that would be a bad idea. I wouldn't have thought so early on when it was the IB and then it was the retracements, but after all of this drama, I think the impact of those wears off, but you know, shows you what I think. Here we go. You know, there's 4 points in the money. No, off that liquidity. I gotta do some stuff here today. I have things to do with that. The shower, I got to pull the shower mix valve cartridges out and replace them or do something to them in the master shower, master bath. I didn't plan on doing any of that, but this kind of noise and waiting for the Fed, I may just, you know, think of something more constructive to do than stand here being frustrated and puzzled. And welcome to the stream, by the way. If you're new here, like and subscribe and contribute in the chat. And Don and I get lonesome. Now Monkey Boy's going, ooh, short, you know, because you're between almost to the 50 and over the 25, and I just don't know that that's any pertinent data anymore. I don't know how to tell that, actually. I wouldn't know how to. Well, you can do some edgeful stuff to do with the time. Did it break out, you know, within the first hour or after the IB or something like that? Stuff I have yet to look at enough to make a statement about. Yeah. I wonder what potential anything is going to happen now. You know, like, look at the price action now and then just think back to right here. There's tagging that liquidity finally, and then we're going to go up here and get the, I guess, the 50. I would like to go short, of course, because that's my tendency. But that's not a thing yet, even in Edgeville. Remember that these lines here now, this is just the 50 and the 25. The IB high is up above us over here because the range is screwed up because of this thing. POC, the overnight POC is right on the open. I would be real. Oh well. I would not be in a position when the Fed starts. I would suppose that if he decides he's going to be a lackey and cuts, I don't think he can do that autonomously, though. I don't think he's got enough horsepower. It takes 12 votes or 10. I think there's 12 governors and 10 votes every meeting. So I'm not sure that his vote has any more horsepower than anybody else's, but I'm not sure about that. The wording of that could certainly be, you know, everybody hangs on every word with these guys. There was a short at that liquidity. Only 4 points, though. We keep doing that. And there's this ledge here and this low volume zone node just above it. And there's the 50. So I think I'm going to hold my ground here and either likely not take a trade. That little double top up there, if that's what that is. A cute little guy right here, huh? If you pay attention to all those things. Six in the money, 6 points. Man. Man, oh man. Boy, we just tickled the 50, huh? He likes to want to do that. I was able to make an appointment to go take them to the bank at 3:30, so that's perfect. No interruptions to the stream here, and the world famous. I'm really dying to hear what Wars is going to say. Have a kind of a quiet. No, I just was not talking. I was making an appointment on, unless the mic quit. No, not yet. I was making an appointment with the bank online on another machine. I got to take Tam over there and fix her account up. Now that she's 18, needs to put her social security number in there and change it from a child dependent to an adult or whatever the lady told me last week. So, and she needs to see how to make a deposit and all that. Let's see though. I did let the music poop out, so that's a big no-no. Let's just go with the old standby classical jazz. I think I said this before, but remember Friday's a holiday, so it's been a magic week. Magic. Magic week. Well, this is pretty funny. Are you looking? Yeah, I guess rather than read it, you can see it. Well, they better bust a move because Wednesday's about over. And good. Like I said before, good. No matter who started it or everything, I'm glad it's hopefully going to wrap up. I do have to keep reminding myself that 4 months ago there was no war or problem in the Straits of Hormuz to think about. It's just kind of amazing when you think about that. Yeah, I was just not talking, sorry. My old machine around the corner on that other stand-up desk over there, and to the left, my left is, Outlook and Office and all that stuff. I was making an appointment with a banker online. I definitely would not want to be in a trade or in a position going into the Fed, especially this one. And to enter a position now, I would say has a high probability of still being in a position when the Fed comes out, because they could easily chop it up and down like this and going into to that meeting. There's no other inputs until the Fed meeting at 1. This could happen until then, I think. This might be a job for the shower and stuff like that. And all the clickbait headlines, are so, even for some place that's relatively, I think, relatively credible, like Tasty Live, headline: Iran war ended, SpaceX went parabolic. Tim Knight says that none of that shit happened. I mean, I guess SpaceX went parabolic for a day or two, or maybe, until they get all the retail guys that got allocated, and then they're in lockup. They have no votes. The share split, or the share type split, for every one share sold to somebody retail, the voting shares, like Musk, 10-1. So those people have absolutely no say, and they're locked up. So, yeah. Musk has definitely worked it the way he wants it, that's for sure. Demanding inclusion in the indexes right at the lockup, so that when the index funds have to buy at whatever price, using taxpayers' money and taxpayers' retirement accounts, that piece of crap can sell his stuff, and it's well organized scam or scheme or whatever. For a company that's been in business over 20 years and lost money every quarter. Every quarter. Boy. At one point in time, not so very long ago, first of all, investment bankers took people's, they did the IPOs, not some guy telling the bankers what to do. And the company had to be profitable quarter over quarter for at least 3 years before anyone, including the exchanges, would consider listing them. And what a coincidence. We had some stable companies that lasted for a long time. That evaporated pretty much at the tail end of the dot-com bubble. And now it's just the Wild West. The Wild Wild West. Funny movie. Well, there we go, over the 50. Okay, everybody short. Everybody dance. I am absolutely not going to do that. But if I'm correct in if I remember what I did, this on close should be a trigger short. This is why all of this forward and back and forward testing is done in the simulated environment in IRT, which ought to be obvious. I would think. Let's see what time. Now it's about 1800 in Paris. London's gone to bed. It's 5 o'clock in London. So I think it's an hour difference to Paris. I don't know. It's so long since I was in Paris, I don't remember. Yep, there's the short, as I thought, right there. So let's see what happens. The reasoning behind these is that after back and forward testing, then and identifying that there is in fact a positive edge, whenever that happens, you take the trade just as the system did and lean on the law of large numbers and the edge. I mean, it's pretty simple. Maybe I'm too simplistic, I don't know. And in this market today, with the potential news events and the FOMC meeting, I would not be taking it. And I did not. I thought I had a clear space when I was discussing this right here and saying, well, I should short because here I've interpolated between the two and this ought to be a short. I just didn't act fast enough, and then this happened, which had nothing to do with the market or the data, or did I know in any way? No, absolutely not. This was Trump, which was one of the reasons why I was hesitant, because I try never to put on risk when there's some event like that can do this. Imagine if you got long. If your signal was somehow long off that, imagine that, you know? That's why stay clear, I think. But it'll be interesting to watch this one play out over here, because it is exactly and very simply the way. There's the breakout, and it follows the data. There's the breakout, there's the retest to the 50, and that's the short targeting the low and beyond. So that's how it works. And then when this goes way down here and there's a lot of money, then I'm cussing myself for not following along. But you can see the obvious other side of that coin. Maybe safe now. We've got probably, well, I don't know. I think they're having dinner and stuff, so there could be a bunch more microphone moments. Typically, this would, just looking at this from a trader's lab perspective, or my older methodology, risk to reward, is there enough risk to reward? Well, there's 91, and there's the first obstacle. This wasn't here. Yes, this was here because they're migrated up. So there's the first obstacle at 89. That's 2 handles. There's another 2 handles, liable to break that way, but this would not be a valid entry because there's not enough unobstructed range to the first scale. So there you go. And that's one of the real dangers with rearview mirror trading and all these kind of things, is we always see and remember the good stuff, or the things that worked out, not where it didn't. And it's going to break right here, looks like. Good for it. Them, something. So we passed my wuss out spot, it looks like. Looking on the other machine again. Sorry about that. Yeah, that would have been great. I would have been going, oh my God, I need out. One of the advantage, well, I wouldn't know about advantage, but one of the plus side ticks, I guess, on this doing the Lucid story for this testing is like, you know, these last couple of trades that I've made where I was $150 or something like that. Well, that's times 5, so that, you know, yesterday was $750 instead of just 5, instead of 150 when you do the copy trade to the 5 account. So that's how that economics of scale can come in, and it really makes a big difference on the return on investment, sort of, you know. At least that's my thinking. And obviously it's a fixed risk, without question, fixed risk, real risk for this testing, which isn't a risk against my trading account. So the only real risk you have is the one-time fee for the challenge, which is $50. $50. So that's why I went that way. Maybe wrong, but that's what I am doing. And in this environment, I'm not at all disappointed or ashamed that I'm doing that, because having my meager account at risk in this current situation is, I need to be risk adverse as much as I can and still be able to trade. I mean, obviously, you can just shut down your systems and turn around and never trade, and that's about as risk averse as you're going to get. But it's hard to make a profit doing that. I'm going to probably duck the bottom of the hour here to do the, you know, lunch, shower, all that drama ahead of the Fed thing, because I want to see that. I want to see that meeting. Obviously, it'll be recorded all over everywhere, so you can listen at any point, but yeah, at least the reaction to the rate announcement. Our little trade is not, we're not going to retire on this yet. We were doing pretty good down there. Where's the mouse go? We're doing pretty good down there. No, we're not doing so good. Following on with the thinking here about the lucid accounts, the problem I've recognized in myself, and I think we talked about this before, I can't differentiate between my own funded AMP account and these evaluation things mentally. I'm still as conservative and go through the same thought process, and I'm still have a similar risk aversion, or at least risk awareness. And that's not right. Not to be cavalier or overtrade, but it has to be, I have to figure out a way to deal with that. Like I should have been short right here. Instead of just talking about it, I should have just hit that button. Just as a recent example, and that's not good. Yep, take care. I'm going to do the same thing and then be back in time for the FOMC at 1300. I'm going to step away the bottom of the hour. So I need to deal with that somehow. I'm not sure just how, but and then the hedge and working out the hedge system trade management in lieu of the hard stop. They are at the same point, and there is no way I eliminate a stop. One replaces the other. But I still, kind of struggle in a hurry to get the orders set up in respect for the hedge, because it can't be automatic. It's not like multi-brackets where I put in an order and when it fires, the brackets and the targets and the stops are all just automatically placed by the system. The hedge idea doesn't do that. Boy, that would be great. If I was a code monkey, that's what I would build. But alas, I'm not.
I can't imagine this would have any bearing on the fact, but that's about as pretty damn close to the open. Where's the open? Let's see. Oh no, the open's down here. Pretty damn close to the open on the roll. I mean, Sunday night. I don't see any other. I mean, I don't see any wonderful. Just looking around for what, why, you know, why that? Why that price right there? Why 60 quarter or 60? Maybe there's no why, but I would certainly think that there was, or a fat finger, and they dropped down and grabbed it. But it looks to me to be more of a, you know, this was moving that low. 60, there's a little bit of liquidity still sitting at 60 that they didn't take. I have no idea. I guess one side of me understands that this is a random market and the outcome is 50-50, et cetera, et cetera. But when something like that happens, it seems so purposeful. Why did it go exactly to 60? You know, why that level? And how did it get to that level? Somebody had to have, there had to be an order down there. Otherwise, sellers wouldn't have hit it. So, I gotta think about that one. How would that work? How would that work? All right, bottom of the hour. I'm going to step away, do my noonly kind of thing early to be back for the 1300 FOMC meeting, Kevin Warsh's big adventure. And no trades, nobody left on third. I'm going to prevent this from happening. Something random happening. Lucky that I like to tap dance on the keyboard cat. And I'm still not comfortable about that, whether that this remedy that I makes sense. This should, according to Bookmap operating manual or whatever, and the way I interpret this, that ticked means that only market orders, but all market orders, will require an order confirmation dialog to be submitted. And that would exactly replace this drama over here. So, all right, I'll be back in a while. So we're coming right again over here. Meaning nothing, but just to point that out. Well, so it's working out pretty well.
slow computer.
Well, it looks to me like they cut them. Look at this. Now here is this is not a trade, right? This is not a trade, but it was in the trade from here, and we are. So there we have the reaction to the Fed. Well, that would be a beautiful thing if you were on the right side of it, eh? So let me guess, what did this... They held them steady. They didn't lower the rates. I mean, raise the rate. Wow. I'd say that says what this guy's about. Oh, they closed the gap. They closed the gap high on between the 12th and the going on here. They closed the gap high between the 11th and the 12th. The 15th, I mean, sorry. Look at that. Yeah. They didn't quite do it. According to my records, here is the gap low. There's the gap high, of course, but here's the gap low. They didn't quite get the job done over here. Let's see what happens on the, I'm sorry, talking about, here we are, and here's the gap low. As far as I'm concerned, we didn't get the job done. 98.25. 98.75 is what I have. Let's see what's over here. According to this, we closed the gap by 10 handles, but not according to here. I wonder if I've got my, if I did my, high is 75.24, it says. Huh. That's pretty damn weird. Let's go up here and see what we get. That does close the gap, but I don't know how this didn't correct automatically. I wonder if any of these other levels are off. Because this was part of the corrected height for the gap. Should have been corrected by the 62.5. Ah, you know what? Who gives a damn? Who cares? I mean, actually, but. Now I move this up to 64, to the same as what the recorded high is over here, which is 75.24. Oh, wait a minute. I think I screwed up. I absolutely did screw up. It's not the high, it's the close. This is the range. So the gap is, I was right the first time, 98.5, and that's what I add. And that's the close, and the gap high is the open. Which is 99 quarter. This is the close instead of the high. I don't know how you figure that, to be honest with you. Range gap would be the high to the, and so we did not close the gap yet. As far as that goes, I don't know how to think about it. I used to think about it in range terms only, and then I started using the edgeful thing a lot, and did a bit of Googling, and they definitely, when somebody talks about a gap, they're talking from the close to the open. In the back of my mind, I'm still thinking about range. Well, has this guy started? No, he starts in another couple of minutes. Well, that was a waste of time. Could have taken a nap. Should have taken a nap. More productive use of time, I guess.
Slow computer.
I'm not sure whether I can do this this live stream here or not. Let's see. Oh yeah, okay. Hear what this new guy has to say.
At any institution, a change in leadership is a natural and timely opportunity
I'm not hearing it, but
to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy. On that score, you might have already noticed something, a difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture. This afternoon,
it looks like there's a big delay in that video. I'm going to see if I can pick it up.
it's been the practice
Different. Stand by. Where's that coming from? Oh, wait a minute. I think I got it.
for participants to submit these projections, and I have encouraged my colleagues, at least as currently structured. In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next. Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles. Ask hard questions. Examine current practice. Consider alternatives. And ultimately, propose next steps for policymaker consideration. Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications. This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago. The second task force, the one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet. They will assess alternative frameworks for the conduct and operation of monetary policy. The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy. Fourth, the Task Force on Productivity and Jobs. It'll survey the pace, the reach, the economic impact of new general purpose technologies, including AI, and explore the implications for the Fed in pursuit of our employment and inflation mandates. The last task force, the one on inflation frameworks, that'll examine the drivers of inflation, first principles, and weigh the full range of ideas for delivering price stability in a changing economy. You'll hear quite a bit more about these task forces and this overall initiative in the coming weeks. Enough for now to make a simple statement. Each task force will serve an objective shared by everyone in the system, shared by everyone around that table that I sat with over the last couple of days. A Federal Reserve that is clear-eyed about its mission, fit for purpose, and focused on the future. And with that, I appreciate your attention. I'm happy to take your questions.
Hi, Chairman Howard Schneider with Reuters. Good to see you again, and welcome back. This is a lot to be putting in motion so fast. What is the timeline you have in mind for each of these?
So I think it'll depend on the task force. It also depends on the urgency in which we need clear answers. My expectation, I'm still in the business of recruiting and finalizing them. My expectation is the task forces will begin work in the next couple of weeks, and we'll start to get some more information from them, some more framing of how they see things starting in the fall end, hopefully most, if not all of them, concluding by year end.
And just specifically on the inflation framework, you talk about first principles. Does this include a review of the 2% target itself? You've mentioned that things to the right of the decimal point don't matter. Should this be starting from a premise that 2% as a point estimate is too strict?
Let me break that into two pieces. First, on the inflation framework review, their remit is what are the drivers of inflation? What's the Fed's responsibility for inflation? In part, how do we measure inflation? But that'll overlap with my data group. On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before, I tend to focus on the left of the decimal point. Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what we're taking on.
Thank you so much. Colby Smith with the New York Times. You've in the past said that inflation is a choice, and in the policy statement, it includes this pledge to deliver price stability, as you've reiterated today. But looking at the SEP, the bulk of your colleagues expect core PCE to run around 3.3% by year end, and for the 2% inflation target not to be reached until 2028. So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time inflation waves to wash through and for underlying inflation to step down after so many years of inflation running above target, and under what circumstances you would support the Fed taking some action and raising rates.
Sure. So quite a bit there. Let me try to break that into pieces. First, we have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy over the last any number of years, in January, the Fed, including the strategy that we're still bound by, the Fed statement says that inflation is primarily determined by monetary policy. You bet it is. I've said for years inflation is a choice. You bet it is. And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded like an encouragement for me to give forward guidance. We've dropped forward guidance. Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision. But I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
So just following up, I guess, on the current policy settings, then I am curious how restrictive you think things are at the current moment, given the flow of data that we've seen and, you know, forecasts that are coming down the pipeline.
Yeah, I've heard characterizations both inside and the Fed about that. I'll give you my own. It's uneven. If I look at the housing markets as one example, Fed policy isn't the single determinant of the state of the housing market, but broadly I would say there, Fed policy appears to be somewhat restrictive. I would have a hard time managing to say those words if I were to see what's happening in financial markets. So I'd say it's uneven. That's perhaps a function of different transmission mechanisms of monetary policy, whether monetary policy is coming from our interest rate tool or our balance sheet tool. But the good news, we have a task force on that too, and the balance sheet task force will be looking more at that subject.
You've said you don't like forward guidance. You dropped it from the statement this time. But with the dot plot, 9 members suggested that they want a rate increase by the end of the year. And the markets have taken that as forward guidance. So what does this mean in terms of how you guide the markets and in terms of what the dot plot's future is?
I'm going to have to give you the same answer I gave to Ms. Smith. We've got a task force for that. I'll give you a little bit more. I reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, you know, those kind with the big erasers. That's to say that I think my colleagues around the table, when they submitted their dots, understand the world is changing quite quickly. And they didn't feel bound by them 6 weeks from now or 6 days from now in the event that their circumstances change. I'll note a couple other things. What I heard around the table was, as they submitted their modal forecasts, to be clear, weren't, this was more likely than not. This was more likely than their other scenarios. So I didn't hear tons of conviction. What I heard was the kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful in the conduct of policy. I suspect by year end, as I mentioned in my opening statements, there'll be a review about communications broadly, press conferences, dots, meetings and the like, transcripts, minutes. This will be part of that. I don't want to prejudge the outcomes there, but I'm pretty open-minded about what they could be. And I was just incredibly impressed over the last couple of days. My colleagues over the last 2 days, and frankly, over the first 3 weeks I've been here, they've been very open about changes. Change isn't easy, change is filled with risk, but our number one goal is to get monetary policy right. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability, and there was no disagreement on any of those points.
At the risk of possibly getting the same answer about task forces, communications, what is your feeling about these news conferences? Are you going to continue one after every meeting? Do you find them useful? What is the future for the way Kevin Warsh will communicate?
Well, this one's probably got another 15 or 20 minutes in it, so I don't want to prejudge the outcome. Press conferences can be a very useful way to communicate with households, businesses, and more broadly, through using the likes of you. I had a great old mentor named George Schultz, and his mantra was press conferences are useful, but when you have one, you want to make sure you have something important to say. Today, I think we had something important to say about our commitment to deliver on price stability, our commitment to rethink practices with an eye of moving the Fed forward, and to give you and the American people a sense that these aren't idle thoughts, these are concrete thoughts, that we're going to seek out the best minds, both the best thinking inside of the Federal Reserve and the best people I know in business and economics and the academy and technology and the rest, to share their views. That's what we're going to be doing here, the pursuit of truth. I think we're going to come up with some new and interesting things. We made some changes today. I expect more changes to come, and some of those might well be worthy of a press conference.
Hi, Chris Rugaber at Associated Press. Thanks for taking our questions. Could you give us a sense of how you see inflation more in the long term? I know you may not want to comment on the ups and downs, but is this mainly driven by energy prices in the Iran war at this point, or do you have any concerns about underlying inflation pressures in the economy? Thank you.
So I can't do much better than the committee just did, so let me restate it. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. The paragraph goes on to say, but to be clear, the Fed will deliver price stability. My own judgment is the committee spent quite a bit of time, not just in 2 days, but over iterations of a couple of weeks. That's what we're prepared to say about inflation, but the commitment to deliver is strong, unanimous, and unambiguous. And that's, I think, an important message. We've missed for 5 years, and we're going to fix that.
Well, great. And then just on the data task force and everything else, I mean, generally speaking, I think people feel the Fed looks at everything already. Certainly that was the sense from before. Is there data that you feel is not given enough weight? I mean, you mentioned the trimmed the mean in the past, but again, that's well known to certainly most Fed members. So what is that task force looking at, and what might be I mean, I know you don't want to prejudge the outcome, but are there examples of data that you expect might be given more weight? Thank you.
So you're answering my question, so let me say I don't want to prejudge the outcome. I also don't want to say too much about what they're going to do, because I still have a phone call or two to make before I've nailed down the people that are doing that. I'm interested in what the outside experts' view is on the subject. I'll say this generally. Most of the data that central bankers and other government officials in the United States consume come with old-fashioned survey methods, a national accounts of what the U.S. economy looks like that looks very little like the U.S. economy in 2026. Survey methods that don't have response rates that we need, asking questions that might have been quite applicable a generation ago that are less applicable now. So even inside of official statistics, I would be open-minded if the task force and our own best thinking had recommendations how those official statistics can be brought up to a standard of our time using new analytic methods. I'd also say this, almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision, that is telling them what just happened at that very moment. As you know, there are normal, long and variable lags in the conduct of monetary policy. What we're really interested in is what's happening right now. What we're less interested in is echoes of history. And you're hearing from my answer that some of the data that we receive, that we're waiting on, the first Friday after the month, the payroll index or something else, that might be an echo of history that's quite useful on its third revision. We need to take those error bounds down because we have to make hard decisions in real time. I'm really open-minded that there is a lot of new data sources that we can learn from the private sector, from reforms in the official sector, and new analytic techniques that are far more refined than asking a simple question about whether something was core or non-core.
Edward. Thanks. Welcome, Mr. Chairman. Edward Lawrence with Fox Business. So if you don't give a lot of ongoing forward guidance, won't the markets have more volatility, and shouldn't Americans have more access into what you're thinking going forward?
So I think financial markets perform best when they react to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets are paying attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely and what are the tail risks. Financial market prices are probably the most important source of information to guide central bankers. But when all the financial markets are doing is reflecting back what we've said, then we're taking the most important source of information and we're being blind to it. I'd like us to create a system where those blinders come off, where markets are following data that they efficiently think is reliable, and they'll be watching data, we'll be watching data. They'll come with better information through market prices to us. We can make more informed decisions with ultimately the goal that I said at the outset, deliver on the price stability objective that Congress told us to do and that we've got to get in the business of doing.
Yeah, if I could take you in the meeting a little bit. This is your first meeting. The board members seem fairly hawkish when you listen to, in general, when you listen to what they're saying. Was there any discussion of a rate cut going forward today?
There was one proposal on the table. There was no discussion of any other proposals. The discussion on that proposal, I would say, was quite limited. The group was unanimous and unambiguous on it. It has been the practice of this central bank and others to have a range of alternatives. Today we had one. I thought it furthered the discussion, deepened it, and made it clear what we needed to do and how we needed to deliver. I wouldn't prejudge what happens in the future, but there was only one big subject for us. We took it on. We had a good family fight on it for a couple of days, and we ended up, I think, in a better place.
Claire. Thanks a lot, Claire Jones, Financial Times. Coming to this blind, reading this very nice short statement that I think we've all appreciated in the room, one might wonder why you didn't raise rates today, considering what you're saying here about the risks to US inflation and your mandate. I guess, why not, and what would you need to see in order to get to that place? And secondly, on your task forces, are there any best practices at other central banks that you'd consider looking at? Thank you.
Yeah. I'm glad they're in the practice of giving you two questions, because my answer to your first question was going to be very curt. I've got nothing more to say than the statement itself. And to the point of the question I got before, market reactions to what we say unfiltered, I think is more helpful than having delivered a statement, me then improvising further upon it. Best practices of task forces. This is a subject I've thought some about. I've been on a task force or two in my life. Best practice, find the best minds. Ensure that the task forces have a range of people, both by backgrounds and predispositions, so they too can have a bit of a family fight. Make sure when you establish a task force that the group that's going to be the recipient of the information feels as though they've got some equities in it too. That's why we're looking for, haven't done the final roll call, some of the most significant talent we have in the building and across the reserve banks on each of these, and in some sense seconding them to this group for a period of some number of months, so that the leaders of the task force know what the most analytical central bank in the world thinks about that. They can reflect on it. And a final best practice, we're not outsourcing decisions to anybody. Administrations past and present, reserve banks have chosen a group of 19 people around the table. These will be our decisions. We can agree to some of the recommendations, disagree with others, have a good family fight about it. But what comes from them will, I hope and believe, make the discussion we have internally better, stronger, more of a dialectic, so that we can finally deliver on that price stability objective.
Just a quick follow-up on your markets point. If you look at 2-year yields, they're really suggesting that markets think more tightening is needed. Would that be your read on what the 2-year yield is saying as well?
We were in such a good place. This is why we don't do third questions, I presume. I'm not going to offer any commentary on market reaction over the last 30 or 60 minutes. What we've given markets is a new chapter for the central bank, some fresh thinking. What we've given markets and households and businesses, I think, is a commitment to ask ourselves hard questions such that we can deliver on the promises that we've made before. This is a lot of change for financial markets to digest. I wouldn't be particularly intrigued by how they react in the first several minutes or even first several days. What I think is most important is that financial markets, and at least as important, households and businesses know that this central bank will deliver on price stability.
Hi there, Chairman Warsh. Brian Chung with NBC News. Thank you for taking our questions. So when you say that we've dropped forward guidance for the layperson, that might sound like the Fed's going to say less or offer less insight into where their borrowing costs might go. So for the person that maybe you might run into at the grocery store, where the price tags are rising at a faster pace than their wages at the moment, how would you explain it to them? I don't know if task force might be the answer there, but how would you kind of communicate this era, this chapter of the Fed?
If I told somebody in the milk aisle that I had a task force for that, I think that would be doing a very poor job, so I appreciate it. If I saw somebody in the grocery store, what I would say to them is that we cannot have a very significant effect on particular prices. The price of oil in the markets today, or even the price of a dozen eggs, that does not have first-order consequences to what we're doing. But we do have a really important job there, and it's to make sure that those changes in oil or beef or eggs or milk don't broaden in the economy, don't have second and third order effects. That's our job, that's our commitment, that's our capability, and we're going to deliver on it.
And then is the Fed's relationship with the Treasury also under review? There was the normal breakfast meetings with the Treasury Secretary. Is that something you intend to continue doing? And have you had conversations with the President since you're swearing in?
So on the President, I don't have anything for you. With respect to the Treasury Secretary, he has been posting pictures of our breakfast, so I don't think I can deny that. The long tradition at the central bank is that the Fed Chairman and the Treasury Secretary meet weekly. I think we've pulled off 3 of those so far. I believe he's overseas this week, so this will be the exception to the rule. I think they're very useful discussions. The central bank's objectives and our roles and responsibilities are quite delineated from the fiscal authorities. And in my view, monetary policy is independent in the conduct of what we do. But that doesn't mean we're not interested in what's happening with the fiscal authorities. The way I think about it is this central bank needs to have a wide lens, but a narrow remit. We need to be quite interested in what's happening in the world. I won't be breaking any news here to suggest I'm quite interested in what's happening in the Middle East. That does have some effect on our day job. It doesn't mean it's our responsibility, but I think we're going to keep a wide lens, and my meetings with Secretary Besson to this point have helped widen that aperture. So we're aware of things that could affect our day job, even if it isn't.
Steve Leisman, CNBC. Mr. Chair, thank you. Mr. Chairman, thank you for taking my question. You had said in the before you became chairman that you thought productivity was a reason why the Federal Reserve could lower interest rates. Do you still believe that to be the case?
So the committee had a discussion of productivity today. AI came up. The way I thought about it before and socialized with the group is that artificial intelligence, the latest generation of general purpose technology, is perhaps as important a change in the economy and business and households that we've had in my adult lifetime. It is filled with both a huge opportunity and with risks. I take both of those very seriously. You may have heard me say before that AI is shorthand perhaps for American ingenuity. That doesn't mean that it's going to be easy. That certainly doesn't mean it's not going to be disruptive. But over the long term, my conviction, and I heard quite a bit of support for this around the committee today, is the United States is a winner as we go down this. The United States is ultimately going to be better off in that. Now, to bring that back to the conduct of policy, timing, scale, speed, implications for output and employment, it's one of the things we have a task force to do.
If you don't mind, a follow-up from the other side, which is that when you look at the strong job growth that's out there, the elevated inflation, GDP seems to be going pretty good, and the stock market seems to be soaring. Do you look around this economy and see the funds rate being restrictive?
So that's your second question. I'm going to give the same answer that I gave before. I'd say as I think about the conduct of policy, what matters is what's the effect of policy. Not what do we say, but what happens. And the best way I can describe it is it's uneven. I do see some restrictiveness in things like housing. It's hard to use those same words anywhere else. I'll just make one other point. You talked about one of our dual mandates on the employment side. I don't believe that we have a cruel choice. I don't share the view that was expressed a few generations ago that Federal Reserve chairmen show up at a podium like this and say, you got to choose. And you're going to have to decide whether you're willing to tolerate higher inflation to put more people at work. I don't believe in that. What I believe is if we do our job, we can make strong growth, low prices, and strong employment mutually compatible. And so what you heard from the committee today is we've got some work to do on the price stability front.
Nick.
Thank you. Nick Timmeros with Wall Street Journal. Chairman Warsh, you've said repeatedly credibility is earned by delivering. If credibility requires delivering, the move would be to tighten or at least to threaten to. Now, you didn't do that today. Why not?
That judgment you expressed was not expressed by any of the 19 people around the table. We'll be meeting in 6 weeks. We'll take up the issue again.
And if I could ask about AI, the build-out is generating enormous demand right now, CapEx, data centers, power. The productivity payoff may be further out. So in your judgment today, is AI adding more to demand or to supply?
It's a good question. At the central bank in an economics profession, what we spend most of our time doing is counting demand. It's easier. We can see it, we can count it, we can check it, we can revise it. What we do, though, is we infer supply. You'll notice in the second paragraph of what one of your colleagues described as a very short statement, we have a sentence on the demand side and a sentence about the same length on the supply side. They're both important. Just because we can count one better than the other doesn't mean we're going to favor one more than the other. With respect to AI and the growth of data centers and infrastructure around it, we're counting the demand side, and it is no doubt showing up in GDP figures. We can be less certain when we infer the timing and extent of the growth in the supply side. It may well be an intuition the supply side is going to expand, but it'll take longer. I just describe it this way. There's a race between supply and demand. Milton Friedman says that the only thing we know about economics is that there's a supply line and a demand line they ultimately cross. When they cross and what are the implications for policy? The good news for you is we have a task force for that.
Andrew.
Thanks, Mr. Chairman. It sounded like on the task force on data that you were looking at overhauling or completely overhauling the system of national accounts, the way the government mines the economy. Is that your ambition?
In a word, no. In a few words, much of this data gathering happens in other government agencies to which we owe a tremendous amount of respect, tremendous amount of deference. But if in the course of this we come up with recommendations, which Fed staff have already begun to develop, about things that they could be doing to help inform us as policymakers, we're not going to hesitate. Again, I don't want to try to delineate the four corners of the research of the task force on data, but I do think there will be a review of official statistics, and at least as important, a view of bringing the best practices from the private sector and new analytical tools made possible by AI so we can forge these into a fabric that gives us better real-time information. So as I mentioned before, when we're making decisions that we'd say are real contemporaneous data, not data that we call contemporaneous, that's really an echo of history.
Okay, thanks. The other question I wanted to ask is related to the building renovations. Are you considering any changes to the renovations, the projects, just in light of the fact that they became kind of a political football in the last year?
I heard something about that. I don't think I'm breaking any news, but my view, when you show up at a new institution, you should go meet with the Inspector General, just as a matter of good practice. It's a practice that I hope to continue. I've had one meeting with the Inspector General, And he told me what I believe the world knows, which he'll be coming out with a report on the building and the building projects at some point later this summer. I'll be interested in reading the report. From my perspective, with a forward-looking glance, is there anything that we can be doing or should be doing from this moment until the completion of the project to do what we can to be good stewards of taxpayer money and make sure that we're delivering on the promises that we made? Some more work to do. You might not be surprised in the first few weeks. I've been somewhat preoccupied on other matters, but I promised to get to the full breadth of the Fed's tasks in the weeks ahead.
Victoria. Hi, Victoria Guida with Politico. So I know that you did not submit a forecast, but you are the person who is authorized to speak on behalf of the FOMC. So I'm wondering if you could tell us in the SEP, the increase in the expectations for inflation, is that all because of the Iran war? What was the discussion around the expectations for inflation being higher and also potentially growth being slower?
So my read of what I heard in the room reflected, I must admit, in the SEPs, is half of my colleagues thought the policy rate, given all those developments, should be at this level or lower between now and year end, and the other half thought higher. That 19th voter was me, and I didn't submit one. There's a range of views on the questions of first and second round effects, no resolution or conviction, but we'll be meeting again in 6 weeks. I think we're going to know more then, and I think that my colleagues are very attentive to incoming developments between now and then.
And can I just quick follow-up on the SEP? You said that you're still encouraging your fellow committee members to submit forecasts even if you're not doing it. So what do you think is the benefit of them doing it even if you don't?
That's the commitment that the FOMC made, and it's a commitment that I hope we live up to. Commitment we made was to deliver price stability. I expect us to live up to it. By the time we get to the end of this year, as I mentioned, I wouldn't be surprised if there was a new communications framework. There were some changes to the SEP. That's a committee discussion, a robust discussion. I think we'll have it. I believe we're going to come to a better mix of communications to deliver on what we promised, but I wouldn't want to prejudge what those are. But between now and then, I would continue to expect colleagues to submit their SEPs. Some of them, I think, believe that the practice is currently structured is okay, but I heard a lot of interest in real reform, generally about all these topics. You didn't ask it, but I'll answer. It was a pretty gracious couple of days, and it's been a pretty warm few weeks. The institution wants to figure out how we can do better. The institution's going back to first principles, and I'm encouraged that what we've done in the statement, what we're thinking about doing with respect to the SEP, that instinct towards a new chapter is a real one, and by the end of the year, I hope we can put some points on the board, both in form and in substance of delivering.
Go to Enda for the last question.
Thank you, Mr. Chairman. Enda Curran, Bloomberg News. Could you guide us through, please, some of the principles that guide your own reaction function, and tell us a little bit about the kind of conditions that you think when the Fed should respond?
It's going to be a very unsatisfactory answer to the final question. The Federal Reserve has a lot of responsibilities, not just in monetary policy, but in supervision and regulation, consumer affairs, and payments. My own view is our credibility comes from delivering on what we're saying we're going to do across everything we do. I've devoted more time in my first 3 weeks to monetary policy than all those things. But the more we deliver on our promises as good supervisors and good regulators, the more benefit we get, the more credibility enhancement we have in monetary policy. When we deliver on our price stability objectives, which we will, the American people will feel as though the hardships that they've been living through, in part because of inflation in the last 5 years, are in the rearview mirror, and that credibility will have dividends across what we do, and the institution will come to press conferences like this always with an impetus to reform, always with an impetus to do better, but we're going to put some points on the board.
Mr. Chairman, we had strong labour data in recent months. How would you sum up the labour market right now? Do you see it as stable and as potentially a source of inflation? Thank you.
Yeah, so the committee, if I were to try to capture how the committee thought about it, the committee thought that the labor markets were stable. There were some people around the committee who thought that it was trending better than that. Trends matter more than data points. What's happening over 3 or 6 months matters more than any one data point, any one data release. And I'd say the jobs data has been moving in a good direction. If I heard one other thing around that subject over the course of the last couple of days, what I heard was that strong productivity-led growth is not something that we fear, but something we embrace. Thank you all very much.
Okay, most of the FOMC meeting remarks from Fed Chair Warsh. The hell is that? I don't know why that's playing music, but okay. All right, got it. There we go. All right, so this is going to be kind of a fizzled out affair, but there we go. Now, some pretty volatile times today. This Fed reaction makes the big the news up here seem pretty. Wow, that's pretty loud. So I'm trying to see why this music's not ducking properly. There we go. I guess it's ducking down. That sounds about right. Yeah, see how that works. So here's today. Here's the context of today so far. This is the news. Trump. The Fed rate. 14.89. Over a 70-point drop right there. All right, well, I'm not going to reactivate the trade control panels because I would certainly not be taking any trades at this point. I'm going to, we're going to roll into and we'll do the market on, we'll do the market recap at the bottom of the hour, and then take it into the usual market on close imbalance at 1450 and close the stream at 1500 like usual. So, yeah, okay. What a day, huh? We closed that gap. Wait a minute. We didn't quite close the gap, but we got close. The range gap, yes. The close to the open. The close to the low, no. So, yeah, what a day. No trade. A real mistaken no trade right here. But look at, you know, we could say the same thing in the rearview mirror, right? This is exactly why I'm never in a trade, and I just didn't even, I went and did something else, frankly, around these meetings. This is not conducive to risk management. And sure, if you're on the right side of this and you thought, you know, you were short, you bet short, you're a really happy person. If you thought that this was a breakout and a retest and he was going to say something positive and we're going to get some more upside like the market has been doing, you know, like it's its job, well then now you're pretty disappointed about it. So there you go. Now we're going to put in a new low, looks like. Here's that gap. Previous POC gap. And here we go. Typically now, for the last 3 weeks, I've been doing the globe, excuse me, the globe extreme. I'm not sure how long I'll go on with that. Wow, I don't know what's got a frog in my throat here. Yeah, the market is not happy with Kevin Warsh, I guess. I thought he sounded pretty articulate, and which I'm sure he is. And obviously accomplished speaker at getting his point across with subtle little, only a few subtle digs towards Powell. Comments like, the inflation that they have suffered for 5 years. We haven't suffered inflation for 5 years. The inflation was down to 2 points. Since Trump and the famous tariffs, yeah. Inflation has gone up. So I did notice that. I thought that was kind of weird. I hope that that's not, that his ability, his speaking ability and his oratory skills aren't just focused on misleading information, which didn't sound like that's his goal. So we'll see. I hope so, obviously. Well, we got the POC, but we haven't quite got the gap yet. And that's why there's a big liquidity, the only little bar you can see down here, right at the gap. They lifted them off. We'll see if they add them back on. The thing that's dangerous about a slow market like this is you look back and rearview mirror, it looks so easy. You know, I was standing here. I didn't even occur to me to short this. And, you know, that's honest. I'm not rear view mirror pretending. That's the truth. Well, we've officially closed it off now. So much for, oh boy, the MOU's in place. And they're not stopping the selling. So let's, been kind of a weird day, I guess, as for me anyway. Starting with prices this morning, and then Trump at 8:30, and then the Cushing oil crude report at 9:30, and now the Fed. So it's been a fun-filled day. And here we are. Here we have it. There's the open. Here was the big Trump drop, which looked pretty significant at the moment, but it kind of pales in comparison here to the Fed story. And this is the initial reaction right here. And this is the reaction to the comments. Yeah, so what have we done? Well, on the maybe easier to see picture, I don't know if we can get all this smushed in over here or not. Let's check. Okay. This thing is having a problem. Here we are. Here's today. This is the higher time frame chart by Micro Composite for the Micro ES daily time frame RTH session. Each one of these is an RTH session. Here's today. We were in this gap up on the MOU. And now we've down, taken out the POC and closed the gap. It's not, a super outrageous day compared to any of these others, here or here. But it definitely had an effect. Made a statement, I would say. The market made a statement. This is what can happen if you're not paying it. If you're not worried about risk, this trade was put on exactly according to the system. We broke out. I don't know if we can see it here. We broke out. We pulled back to the pullback zone and entered. And then, thank you, Kevin Marsh. And continues on, of course, but there's no way. Well, this would be a great position to be in if I were really in it, but this is in the simulated environment, so I will kind of discount this as a result for my statistical analysis and vetting, because this is a pretty random bar here, 58 handles. 58 handles in itself right there. And it's still going down here. I don't believe the old beauty here took any trades. Let's check. No. Yeah, we did. Took one over here. It was quite an interesting mess. And I guess at this point in time, first of all, it's important to point out that this is a real weird week. We had a rollover on Monday. We've had the Fed meeting today. There's a holiday on Friday. Never mind the G7 is going on with, 1,000 tweets a minute coming out of France. So I'm going to be glad to see the tail end of this week, that's for sure. Let's look at the... This was the calendar for the day. Let's see what we got on the docket for tomorrow. I think it's relatively paying. Now we've got the Philly Fed and initial jobless claims. And then if you listen to the conversation there, or the conference from Marsh, there's going to be a bunch of changes in data, it would sound like. So here's tomorrow. Going to be out of our hair at 7:30. Tomorrow I've got a 4:30 call. So I'll be back on, and then and Friday's closed, so that's not a problem. Nothing to worry about. This is investing.com. You can filter for whatever you want. Obviously, you can look at varying days. These news sources are free because I want to have any resources that I use be visible to anybody that needs them. And this is Financial Juice, which is different than investing.com because they pull all of these random non-traditional economic events into their calendar, which is important to me because we have a big, the 500-pound elephant in the trading room today, in my opinion, is risk. So if you know about it, you can manage it. If you don't know about it, you're in trouble. You know, if you were just fat, dumb, and happy and didn't know there was an FOMC statement today, and you were down here and you're thinking, okay, we're going to go up and now we're going to test out these highs, you got a real bad surprise. And that's risk. Now, we knew about that long in advance, and that's good. That's the way it should be. And again, tomorrow is relatively okay. News is out of the way at 7:30 in the morning. Let's see what happens with Tweets or Us from France. And then Friday's the holiday. And that's pretty much got it wrapped up. I mean, it's been kind of a weird day to me. Still selling off. Still selling down like nobody's business. We're down to 60, we're down to 80 now, so we're over 100. We're 110 sell off from the meeting. We were at 90, so we're down now to 110 points sell off. Would be lovely if you knew about it or were on it. That's kind of one of the downfalls about only trading statistically significant or statistically verified vetted trades and setups. I try to stay completely away from discretionary trades. Well, this, you know, if somebody saw this and came up here and they thought, well, I think we're going to test here and go down and just bet on a short, they're really happy. But that's not, there's no way you have anybody can tell me that they have data for this because it's unique. You can't have a statistic of one data point. So there you go. I will be doing the Globex tonight and tomorrow night. The reason for that, I'm doing I'm trying to investigate if there's some interesting trade opportunities in those opening range. I don't think there is, to be honest with you, and I'm not very encouraged, and it's a big drain on my energy and time, but I have a commitment to take no trades off of the stream. Therefore, if I'm watching the market and I may have a potential trade, I have to be streaming. That's my commitment to my journal. I mean, this is my trading journal. So what good would it do me to not capture trading sessions in my journal? Stupid, right? Exactly. So there we go. We have the market on close imbalance at 1450, as we have every day. Yesterday was huge. Really, really curious to see with this big sell-off. And this was the market on close imbalance yesterday. You read these as 3,224,000,000, 2,155,000,000, 1,025,000,000, 1,322,000,000, all sell side. I'm sorry, this is the 15th, not the 16th. 16th is, where did the 16th go? 16th was here. This was day before yesterday. And where did did yesterday go? I thought I had yesterday in here. Thought I'd captured yesterday. I guess I didn't. Well, sorry. Be interesting to see what happens today. That's pretty weird. What the hell where did I miss capturing that? Huh. Well, whatever. Anyway, it is what it is. So let's see what happens. That's weird. They keep selling off, and I keep scrunching this down to be able to see the data, but they keep taking it lower and lower and lower. We're down to the 70s now, so that's just great, isn't it? $120-point sell-off. Wow. And why are we lagging over here? Yeah, well, I don't have any words of wisdom here for the close. I'm tired and disappointed, actually. Not disappointed in the price action and all this news. I had a wide open day today where I didn't have to go do any school runs or anything. And I was really looking forward to that. And then I saw the calendar and thought, timing is everything. Timing is everything. Just, and here's what can happen to you with the scaling on Bookmap. Right now, these are 5 points. If you shorted right here, you go, wow, yeah, I'm going to take this, I'm going to sell the rips and buy the dips. Okay, so you got in at 90, at say 500, or say the century. This is 30 handles down here, 25 handles. These little hiccups along here are substantial. Obviously, on the other side of the coin, you better have your stops and your risk figured out, or you can get whipsawed out of there so fast you didn't even know it hit you. 3 points. Well, there's a perfect example. My usual stop or hedge trigger is 3 points. So both would be within these price breaks. The entry and the stop or hedge trigger would both be included within one of those price breaks. You wouldn't even be able to see them, barely. Huh. 5 minutes till the market on close and balance. 2 minutes here. Let's see what kind of magic we get out of this. Can't imagine. I can't imagine what. Well, 30 seconds. No, I'm not expecting anything to happen, right? Other than we will have an outcome over here. He's aware of the fact that the inflation is well ahead of 2%. Duh, football. What's going on here? Why is it so far down there? Do that again. Let's do that right there. There we go. So there's our market and closing balance right there. And I have yet to figure out actually what this means in terms of our trading. You know, I can't imagine that any trader, certainly large enough to be dealing with 3 billion shares or 3 billion contracts of S&Ps, are day trading, you know, flipping them around. But that's literally how it looks. You saw 2 days ago. Yesterday they were buy side, not as nearly as big, but buy side. Now let's see what happens. Well, there we go. All sell side again. 2,500,000,000, 2,300,000,000, 555 million, 867 million, all sell side. And that is the imbalance, remember. This is not the total. This means of a group of orders for some to buy and some to sell, there is a 2,506,000,000 more sell orders than buy orders on the S&P 500. You know, that's pretty astounding to me. Yet I don't seem to see any real actions now. It's not, you know, we're not on close. And at 1500 we'll close, and that's when those orders will trigger. And then they'll be executed through the 1600 and whatever. But Jesus, you know, 2 days ago this was 3 billion, so there's basically 6 billion sell side for the S&P 500s. Billion contracts. 6 billion. Shouldn't that make a difference in the price, and shouldn't there be some reaction? You know what I mean? It's really pretty strange to me, actually. There we go. Okay, so what we're going to do here now is let her trade out till the bottom or till the top of the hour, went to 15 over here. In other words, we've got about 10 minutes or so, 7 minutes. Remember that you're, as a trader today, our primary objective is to preserve our account. The fundamental way you do that is risk management. So essentially, we're risk managers. That's what we really are these days. And that's why it's so critical to keep your finger on the trigger, I think. And in terms of news now, this was some random, thing. But the world, the markets have come to realize that any time Trump or any of those administration people, but majority of it is Trump, gets near a microphone, there can be a reaction. May not be at all, not any political statement about him talking or whatever else it is, but it's widely understood there can be a big reaction one way or another to our markets. And that's absolutely what happened right here. This is the FOMC, which everybody knows is a big deal. And I'm never going to be in a trade when that's happening, when the rates decision's coming out. So, after the fact, I guess I could have been a little bit more open-minded and shorted, but I don't have any structured trade vetted setup around that. And I'm focusing on those trades because I think in the long run, that's what wins. Let's see. Let's see. God, I'm sick of that thing being jamming up all the time. And we're going to shut them down here in a couple of minutes, 5 to be exact. Ooh, here we go. A, B, C, higher lows, higher highs. The theory is when you have this kind of a pattern, W or ABC pattern, when the price comes across the center peak, that signals a reversal. Well, if you think I'm trading that one along, you better stop smoking those funny cigarettes. Yeah, I'm apprehensive about the Globex and the Asia stream tonight, but I will do so because I've committed myself to do it, and I will for through this week for sure. That's to be 3 weeks. I'm not sure if I'm going to continue because so far there's been nothing happen, and I'm not going to get involved in a trade in an Asia session at 8 o'clock at night or something like that, and then how am I going to manage it? I'm ready to be done for the day and get up in the morning, So it's not falling into the reasons why I wanted to look. Got a string of singles here. This is going to be an interesting session to repair. Hey Panda, how are you, baby girl? Okay, about a minute or 2.5 minutes. Remember that you are You are the most critical and integral part of your trading office. You need to make sure that you take good care of yourself. Be well rested, well hydrated. If you're on emotional tilt, don't grab the mouse. This business is one of the most highly competitive around, and you need to really be aware of that and on your A game. Work out, be as physically fit as you can, get away from the screens, a few times during the day, rest your eyes. That stuff is really important. And thanks a lot for coming by the stream. Remember that this is my virtual trading journal. I trade live. You'll never see a replay or a recorded trade. I don't ever do rear view mirror analysis about trades I supposedly took in my dreams. And but having said that, all the trades that are taken are live, real time, real money. But having said that, my goal or my intention, nor am I qualified to give financial or trade advice. So there's that. Every trading day morning at 8 o'clock Central Standard Time for the pre-market and set up everything and the statistics, etc. And then trade through the entire day until 1500. And lately, for the last 3 weeks now, I've had a Globex stream trying to analyze whether there's any interesting opportunities in the Globex opening range breakout and then the Asia opening range breakout. So starting at 1700 through about 2030. We're going to be done here in about 10 seconds. I'm happy about that. I got to get the girl going and skedaddle over to the bank and then get back for the opening range and, the Globex, and oh boy, so many things to do. So there's 7 hours on the stream. Thanks very much. I really appreciate it. And tomorrow morning, 8 o'clock, or if you've got nothing to do this afternoon, 1700, you can come get bored with me watching the Globex.